What is up, everybody? I told you I'd get my camera fixed. Spencer Israel. Oh, I'm on the wrong.
Spencer Israel here with whatever this is. Welcome, everybody that was watching live trading with Benzinga. I'm going to wait for some people to file in. We got people behind me. What's going on? I don't know where AB is. He'll join here in a few moments, and then we will transition to our main studio desk in a little bit. But what's up, guys? How we doing? We got ourselves a market today. I guess the takeaway of today is that we can retire the word transitory. Is that right? Is that officially dead? Is transitory inflation itself transitory? The use of the word transitory was always going to be transitory, always, and now it's dead. Aaron Bree, what's up? Winter Pegs, Adnan, Alex, Easy Mike, Black, Rose Goat, what's up? Born to be free, obviously. Thank you, Proton. This is not even my good microphone. This is camera. This is my backup camera. My main camera is not even like functioning here. Let me see if I could get it to work. Oh wait, now it is working. Okay, now my good camera is working. Apparently, cool, awesome. Well, when producer, there is producer Rohan calling me right now. Here, let's put him on speaker. What's up, man? What's up, baby?
How we doing?
Should I put Rohan on the show right now?
Yeah, do it.
All right. Hey, Rohan, you're on the show. What's up?
What's up?
I called you to get us going here, but we went live from our other desks. But get us going on the main studio when you can.
Oh, I thought you guys said 11:30.
We lied to you, Rohan.
Oh, okay.
All right. Catch you a little bit. Rohan is not here because he was getting tested for COVID. True story. We don't know if he has it.
Actually, I made my first live trade of the day, Spencer.
Just now?
Yeah.
Like 2 minutes ago? I saw you 2 minutes ago.
Yeah, since then.
Since then?
Yeah. Well, I closed one trade, so I don't know if that counts, but I opened a new one.
All right. Well, don't you want to wish Rohan get well soon as Tiny Pie Media?
I think
Side note, Rohan's been feeling sick for like a week and did not get a COVID test until today. So, whatever.
Now you're coughing. Jeez.
No, I have a piece of food stuck in my throat. Anyway, all right. Do you want to share your screen and show us what your trade was?
Yeah, sure.
All right.
Give me 1 second.
Damon says be a good person and hit the like button. Yeah, if you're not hitting the like button, you are a bad person. That's the takeaway. So we're going to stay alive here for 3 hours today. Aaron and I. 3 hours. Thank you, Tiny Pie. It's my expensive camera.
Oh my God, Spencer. I'm
What?
a freaking genius. Look at this.
You're a genius? What did you do?
I bought some Zoom calls like a minute ago. They're already up 16%, $100. Yeah, I mean, look, Omicron, it's here, it's coming. People are talking about it. COVID trade is back on. I'm calling it right now, at least for the next couple days. And this is kind of a two-part thing because with this option contract, as the market slip and VIX rises, these contracts will become worth more. So yeah, this is just a little swing. These expired this Friday. So I'm just expecting, hey, whenever there's a sell-off, do not forget there are people buying some things out there, right? Money flows out of some things and into other things. Everyone's not just selling everything and going all cash. Some people are buying other things. To me right now, Zoom was an easy pick as something that people will go out and buy. We can talk about some other COVID trades. But yeah, I mean, the saying go that history doesn't repeat itself, but it often rhymes. So we can use what we've already seen in the past when COVID fears have risen, what has done well, what has not done well. Obviously, we can take a look right here, and I'll get my Benzinga Pro pulled up where we can take a little bit better look at charts and a live news feed and what's going on. But we can take a look at some of the stuff that we know is not going to be doing well, right?
Wait, can we talk about the Zoom thing before we? I want to stay on Zoom for a second.
Yeah, of course.
So okay, so you're long some 215. Is that what I saw?
215. Yep.
215 Zoom call is expiring in 3 days.
Yep.
And you're up in the trade from 5 minutes ago.
Yep.
Honestly, if I were you, I would think about I would think about calling it a day.
I know. I can't though.
What?
Yeah. Watch. I'll show you.
How many trades have you made recently, man?
Sell to close. I made too many. Watch. I'll show you. 3.9.
NG, man.
A trade restriction.
Wait,
I got 90 days till I can do it again.
Wait, 90?
I will not 90 now. 90 from when it was it's yeah.
Wait. You violated the PDT rule?
I did.
When?
I think last week when you left, I had no one watching over me, no one overseeing me, and I'm
Chat. This is why we have to keep an eye on Aaron.
This is why you can't leave, Spencer.
He does these things, and oh no. Wait, so okay, so I've never been in a violation of the PDT.
No, okay. Born to be Free's asking a good question. Am I in the trade till it expires? No, I can close this tomorrow morning. I can close it as soon as markets open tomorrow. Yeah, Jay Rice, you're right. I mean, I know the theta on the weeklies will kill me, but if Zoom opens up, if Zoom rips the rest of the day and opens up to 3% tomorrow, and VIX continues to rise, then I should be good.
Wait, hold on. So I've never been in violation of the rule before. So you're not allowed to open and close a position on
the same day.
The same day.
Yeah, and then I have a hearing with the SEC next Tuesday, I believe.
Do you want me to call? I have a relative that works there
at the SEC.
Yeah, we're not very close.
Yeah, unfortunately, I think this is implemented by Robinhood, not the SEC.
Yeah, it's Robinhood.
So,
you want me to call Vlad? I mean, I can try to call. I don't have his number, but I can try to get his number from Jason, who has it.
Zunaid, I'm rocking a little stash right now.
Looking good, man.
Yeah, it'll be gone tomorrow, more likely than not, unless I'll put this out there. So we're doing a little Movember, No Shave November photo shoot later this afternoon with some members of the Benzinga family. And so after that, my plan is to shave it. But if we get up to, let's see, we've got 586 people right now. If we get up to 300 likes, I'll keep it.
Oh, that's dude. When do you remember what I asked for last week? I think I said if we got like 1,000, I would do it, and we didn't. And then I never followed up because I was afraid if I followed up, we would get to it, and I didn't want to do it. So I'm waiting. You are a braver man than I, Aaron.
Yeah, I'm not going to be ridiculous. 300. That's about it's a little bit more than half the people here. So it's definitely attainable. So we will see. But yeah, I'm also like I feel like I'm sorry not to be off topic. Well, we're already on the topic of my face right now.
Yeah,
I haven't ever. I feel like gotten pimples like this for the last like 5 years. So I don't know what's going on.
Dude, it's stress from the trading.
It could be. If anyone's got some like good facial cleansers that I should use, let me know because again, like I don't think I've had pimples like this on my face since like freshman year at college. So I'm getting a little self-conscious about it being on stream, but I figured I'd fight through it and be here with you guys today.
I appreciate that. Why don't you do this? Why don't you check with Jordan and the affiliate team, see if they have any links for any affiliate beauty products on Benzinga, and why is my camera being weird? And maybe you can get yourself some cover up and also throw a dime or two to Benzinga while you're at it.
Yeah, we could do that for sure. Yeah, so just throw those in the chat. I'll check them out for the
Solar,
people.
Solar Up says use hymns. I don't know if they do this sort of thing.
Yeah. Might need to use yeah, you guys are right. I should probably stop drinking Coke. My mom like called me yesterday about it too. So that wasn't a fun conversation.
Hey, I'm told that our main desk is ready. You want to meet me over there, or you want to go one at a time, or should we just leave together and then?
How about you go over there and I'll meet you over there.
All right, cool.
All right, guys. So I'll pull my screen back up. Let's see what's going on here. Oh, did Zoom have a little? Nope, Zoom is still doing okay. I also, the only other trade I have open, well, in terms of options, look at this. I have $19 worth of Amazon. This was something that I bought just like kind of during the pandemic, and I did it just for, I wanted to see my return, right? So I'm up 46% on this Amazon trade. Let's go to my history to see when I bought this. Bought it on May 28th because I was trying to prove a point to my buddy because he was like, oh my God, Amazon has already gone so much. This was about 2 months after the COVID-19 pandemic hit and the markets crashed. I was like, no, Amazon is not done going up. It still has a lot of room to grow. People are going to keep ordering from Amazon. And so, yeah, unfortunately, it was just a little $13 fractional share buy for me, but up 40%. So that was just that. I have a couple stocks open. Some VU, some VTI, some Robinhood. This Vaxart one was a free share I got from Robinhood. Twitter's just been an absolute dog. I mean, right? Let's look at the 5-year chart. The stock, I mean, it had a good run, but overall, it's back to where it was like, almost 3 years ago, 46.65 in 2018. Now it's lower than that. So Twitter has just been historically like an underperformer. Ooh, let's check it back in on Zoom. Zoom's moving for me. Yeah, I mean, at this point right here, I'm up $170, 25% in a trade that I made. Let's see. Let's go to the history. We'll see right when I made it 16 minutes ago, right? So if you make a trade where you're up 25% in 16 minutes, this is when I would suggest taking some profits off the board. If you have multiple contracts, start trimming them. Of course, I can't practice what I preach right now because I'm restricted. To everyone in the chat that's suggesting, I use my one-time, what's it called? Redemption. Spencer, help me out here. Spencer, we can't hear you. All right. Yeah, Jay Rice, exactly. The money's misleading. I could have put $5. I could have put 5 cents into it and made the same percentage. Again, I was just trying to prove a point that, hey, look, I don't think it's too late to buy Amazon here. Okay, I can hear you now, Spencer.
Okay, cool. Wait, no. Oh man, I feel like we got way up because what I wanted to say before I even found out that you violated the PDT rule, which should be the title of today's show, by the way.
Wait, hold on. Go
yeah,
ahead, sorry.
I wanted to talk about Zoom, but now what I was going to say kind of goes out the window because now you maybe can't sell it. But like Zoom is in a massive downtrend, man.
Yeah,
because
of the external effects of reopening and not needing Zoom as much as we did 6 months ago, a year ago. But now that might be changing for at least a short period of time. I don't think like, oh my God, this Omicron is going to set us into another big lockdown for months and months on end. No, I don't think that for one bit. Nor do I think that.
So wait, that goes against your thesis.
I think the markets are going to react that way for like 2 days, and I think it's going to be an overreaction. Like
today is day 2. Actually, today is day 3.
Okay, let's back up for a second, Spencer.
Okay.
So let's look at the Omicron timeline, right?
Is it Omicron or Omarion? I'm not even sure.
I don't know, Omicron. So we see last week the headlines start coming out, right? People didn't seem too worried, whatever. Thursday hits, markets are closed. We're all enjoying our turkey and Thanksgiving. The next day, Friday, markets are down the worst day in like a year, right? For all this fear. And then over the weekend, some news came out about Omicron, like, oh, maybe the symptoms aren't that severe. It might spread faster, but the symptoms aren't that bad. We shouldn't see a lot of hospitalizations. And then yesterday, markets were up. People were like, oh, maybe we overreacted. And then the Moderna CEO comes on, says some stuff, some stuff that's
Mhm.
bad. People are like, oh, maybe we overreacted by going in and buying a dip, and SPY was up, 1.5% or whatever yesterday. So now we're back in this downtrend today. And I think we could see that continue into tomorrow. And then just like we saw on Monday, maybe Thursday, Friday, we say, hey, we overreacted. Omicron's not that big of a deal. And then all these airlines, all these stocks that have gotten hammered might come back up. I don't know. I just think that investors are going to flock to these names like Zoom, like Peloton, these COVID insular plays.
Your logic is sound. I think maybe if you had done this if you had done this yesterday or on Friday, I'd feel a little better about it though. Because here we are on basically, all right, we'll call it day 2 because Friday was a half day, not a lot of volume, right, in the markets. I know we didn't do a show. So Monday was the first day back really for a lot of people digesting the Omicron headline. So we'll call today day 2. What?
Why are you calling that?
I don't know, because it reminds me of Omicron.
There you go.
No. Okay. Fine.
But yeah.
We'll call it day 2. In this particular trade, obviously you only have till Friday anyway. But like, I feel like you have no slack here, man. Like you're basically like, look, like you're already up on the trade, right? Great for you. If you could sell, I would. You can't, so it's a moot point.
I said that too. If I could trim, I would probably sell one contract right now and maybe keep the other.
Yeah, but regardless, I think tomorrow morning though, at the open, is probably your next.
But we don't know, right, Spencer? I mean, the news cycle tonight could be, all good news about Omicron. It could be all bad. I mean, to me, it is a little worrisome seeing these countries rush to, close their borders to travel, whatever. I don't think in general that's good for the world economy. I would be worrisome too. We saw this at the beginning of the COVID-19 pandemic that places were shutting down their factory, right? And so if companies start to announce measures like that, where we're like, we don't want this Omicron spreading through our employees, we're going to go ahead and take a pause for a week or two till we figure this out. That could be really bad for a lot of companies. So I think we just got to wait and see. I think no matter what, in this time of uncertainty, when people don't know, some of these names like Zoom will become back in favor for investors. Again, I don't know. I don't know, Spencer, if it's going to be long-term months or not. I think, like I said, for the next couple of days, I think Zoom will be a good name that people are going out and buying.
I put up a daily, and I just want to zoom in on the past week here because clearly no one has a clue, and that's the problem, right? No one has a freaking clue. The CEOs of the vaccine companies themselves don't really know, right? They've all come out and said sort of different, sometimes contradictory things in the past couple of days. The market clearly has no idea, because if it did know, then you wouldn't see this kind of volatility in the 4 days in a row. Or just
wait,
yeah.
I see Eric Carrasco in the comments. He's saying he should switch to cash only account, no PDT. I tried that, right? So I turned off margin investing. I'll show you here. Let me see where I can see that. Look, margin investing disabled. I have all cash.
Good. That's
right.
good.
But so why will they take it off for me now that I'm not on margin? Or what else do I have to do?
That was not my understanding of the rule.
Well, how do I make it a cash only account if I've already turned off margin? I don't know. Someone help me out here.
You should have a cash only account.
I do. Well, I think I do. I turned off margin, right?
Right. So if you were to sell everything, your money would go into some money market cash fund. Yes?
I would be under the impression that if I sold everything, the money would be in my portfolio.
They're saying in the chat that it's not allowed on Robinhood.
And Sam says you have to make a new account, which that could be. I'm not familiar with the ins and outs of Robinhood. No, but my point was, if you have money at a brokerage and the money is uninvested, right, where is the money? it's in a money market account, right? It is
On
in
Robinhood, you're saying.
yes, on Robinhood. Oh, Born to Be Free says check your messages on Robinhood. It very well could mean someone is saying you have to make a new account. It very well could be some people are saying you can't do it on Robinhood. I'm not up on the ins and outs of Robinhood specifically, but if you have margin turned off, then you are in a cash account. Oh Jesus! Oh God! Wait, was that was Wednesday?
Can I make a new Robinhood account?
Dude, just close the app, man. Just delete the app and start over.
All right, I'm done. I'm checking Zoom one more time. All right,
Oh
Zoom's
my
moving
gosh.
back. Zoom's moving back down.
Dude.
We're gonna hit this 208.87 level. We might see that double bottom reversal. If we blow through it, then I like Zoom on the short side.
I can't believe you've done this. I feel like that video of that guy who gets hit, he gets hit in the head, and he goes, "I can't believe you've done this." That's how I feel right now. I don't know if I'm surprised, but I'm a little bit surprised. Maybe I shouldn't be. This is only a matter of time. We should have gotten odds. We should have gotten odds of this thing happening, of Aaron Bree, unsupervised Aaron Bree violating the PDT rule. It was only a matter of time.
I mean, hey, if Zoom legs up enough tomorrow, I could be at that 25,000 mark in no time. We don't know what's gonna happen. That would be a heck of a trade.
Okay, man. So look, I don't use Robinhood.
I'm learning a lot from the chat right now, though. I'll
I'm learning it too because every broker's got their own darn rules.
I'll pull up one of those Benzinga money, best brokerage accounts and see which one will be best suited for my trades.
Regardless, the takeaway here is you probably should just not even look at your account until 9:28 tomorrow morning, because what good does it do? You can't do it. You can't sell anything. Or can you sell an older position?
Can I sell an older what?
Yeah. Can you sell an older position that's not from 20 minutes ago?
Yeah, I can close any trade that I've made, just not one today. Not one that I've opened today.
Okay. Do you have any other day trades, swing trades on?
What's that? No.
Do you have other?
That was the only one.
No. Okay.
I had a Tesla call that I opened yesterday that I sold today for a nice.
Wait, didn't you have those Baba calls? What happened to those?
I think I sold those. I don't have anything open on Baba right now. Thank God. Baba's been terrible this week.
Yeah, I know, Jay, that every broker has to follow the same SEC guidelines, but they've all got their own little intricacies, right, for how to do things. So, I use Webull, but again, I've never been in this position. I've never violated. I've gotten those warnings from Webull, and I like when I get them, I'm a rule follower. What can I say? Aaron's a rule breaker. I'm a rule follower. The few times I've gotten that warning, that pop up from Webull, they're like, if you do this, your account can be restricted. I'm like, oh, okay, I'm done. Hands up.
Well, Robinhood does have a nice little thing where you can, you have like one exception where they'll take the pattern day trader off your account. I've already used that though, so.
Oh my God. And you did it into a holiday weekend too. Somehow that's karmic because you knew you were going to have like 4 days off. So you're like, let me get my trading in now before I have to take 4 days off.
So here, Spencer, I'm gonna pull up your Benzinga Pro. Let's take a look at the overall market right now. I just want to see because we saw Powell speaking earlier.
Wait, you put up the wrong one. Hold on. Here we go. Sorry. There we go. So this is my scanner, right? Looking at what's up, what's down. So yeah, I'm always looking at, again, I use this tool mostly to find movers, right? That's why I'm using it. I'm not using it really to like get a feel. If I want to get a feel for the overall market, I have a watch list that I use for that.
Oh my God. Okay. So wait, Powell wasn't even talking about Omicron. He was talking about speeding up the taper. Oh my dear. Why now? Why today, Jerome?
Because he's scheduled to speak to Congress today. I don't know. Someone in the chat said you should call Robinhood. Good luck with that. Actually, no, wait. Didn't they start doing?
Yeah,
phone
they
support?
added.
Yeah.
Yeah.
Yeah. Okay. So anyway, overall market here not looking great today. I've got every sector up here. I've got every the top components up here. Look, in Benzinga Pro, Facebook is now Meta Platforms, but their ticker is still FB because they're not changing it for a while. Whatever. Look at Apple today. Apple of every sector of the SPY, the Qs, the IWM, and of your FANG stocks, Apple is your only stock in the green today. Your only security, whatever.
Yeah,
thing.
that was one that we talked about yesterday. I pointed out as a stock that I liked into the holiday season, and it's also a little bit safer than a lot of other tech growth stocks. That when you see pullbacks in the market like this, right, you're not going to see as big of a hit on Apple than you will other stocks. And on
Is
days
there a
like,
reason for Apple? Sorry,
is there a reason for
Apple?
that? I think it's because what we've talked about before, Spencer, in that Apple you can categorize as both a growth stock and a value stock, right? That it's not going to Apple's still going to be making a boatload of money, even if we do see some more fallouts from this Omicron, whatever. Whereas some of these other growth tech stocks will really get hit by anything in regards to the tapering or raising of rates, et cetera. But because of Apple's just really how much money they have on the balance sheet, how much they make, that they're a safer investment. A lot of people view it as.
Well, so here, I've gotten to the details page on Benzinga Pro. Apple's got a forward PE of 28.6. So just to compare that, Microsoft has a forward PE of 36. That's not that big a difference, right? Amazon has got a forward PE of 55. Okay, that's
right. So just by looking at the PE, you
higher.
can see that Apple's more on the like trading within its value rather than at some crazy time sales.
Alphabet.
Yeah,
26.
Alphabet's in line.
26. Yeah. And yet Alphabet, I think Apple might be up today because there were some headlines about some iPhone sales in China. I mean, I feel like of the FANG stocks, Amazon and Apple. Actually, no, really, Apple is probably the most sensitive to retail, to like Black Friday headlines, right? Because like the iPhone is such a thing. Even though Apple has done well to develop other products and they've got other stuff going on, the iPhone is still the king. And so if there's ever any headline that hints at like iPhone sales slowing or iPhone sales better than expected, the stock reacts to that. So, even Jim Cramer wants to know why Apple's moving.
Really?
Apple iPad sales up in Western Europe as all other tablets decline, from Apple Insider. New iPhone sales surge in China from Data Times alert. So maybe Apple just had a good week last week in terms of sales. I mean, let's go to the back to the watch list, right? Because there's really no reason why Apple would trade against the rest of the market like this, unless there was some headlines saying, "Oh, they had an amazing week. They crushed Black Friday." And I will say, I went shopping on Friday. I walked by, did not go in, but walked by the Apple store, and it was very crowded, man.
I agree.
It was
I saw an Apple store.
extremely. Oh, were you on the mall? Were you at the mall Friday?
I was not at the mall on Friday. I was at the mall last Wednesday, actually, the day before Thanksgiving.
Okay, and Apple store packed.
Packed.
Yeah. The mall that I went to Menlo Park Mall in New Jersey. Shout out Menlo Park Mall, home of Thomas Edison, and the Apple store there was huge. It's like 2 storefronts, and it was packed. Friday at like 1:00. Right. So, I know they had tempered expectations. Apple did, right? They tried to lower the bar for themselves. They said, "Yeah, supply chain guys, you guys know how it is. We're having problems too." This is a big day for Apple. I mean, let's look at the chart here for a second. Like this is real.
On days like this, you can really see what has relative strength and not, right? On a day where everything is red and there's a few green stocks out there, you can really see, okay, this is where big investors are spending their money that they're getting from selling other names. So, yeah, I mean, I don't know what's going to slow down Apple. You can make the argument that it could be getting a little bit overextended, but I think.
Yeah, I mean, it did there. I don't know what that red candle was at 10:45, right? But it did come off its highs of the day. But still, though,
that I think was when everything dipped, when Powell started talking about tapering.
Yeah,
quicker.
You're right. And do you know what he said?
He said that due to a strong economy, they might look at quickening the tapering of the bond buying asset program.
He also said that he basically threw in the towel on the transitory thing. And it turns out, guys, inflation, it was never transitory. It's here to stay, apparently.
Yeah. So we've got some names, and so Spencer, like I said earlier, you know, we can use what we've learned through the first COVID-19, you know, all the different surges that we've had to kind of see what we can expect with this Omicron, right? What was the one thing that helped the markets, and you know, during the height of the COVID-19 pandemic?
What was the one thing that helped markets?
Well, not one thing.
The Fed.
Well, the Fed, right? And
Yeah.
anytime we had good news on any vaccine front, right? When AstraZeneca came out and said, like, oh, our trials, whatever, SPY was up like 3% that day. So I'm going to expect the same thing to happen the first time we see someone come out and say, oh, our pill or our shot is very effective against Omicron. I think that's when we could see the markets really start running again. So I'm going to try to find which company that's going to be.
Okay, so here, let me pull up my pro for a second. So,
well, who's the one doing the pills, like the actual treatment of COVID?
Well, Pfizer has a pill. Merck has a pill. Merck has the pill to treat COVID. But here, this is SPY. I just want to show you guys. So this red candle that looks out of place, where my mouse is, that out of place red candle, that November 9th of last year, 2020, that was the day that Pfizer was like, we got it. We got the vaccine. And then from there, they got it. They didn't have approval. They were like, we got it. It works. And we popped on that day, and it was a bit of a sell the news thing. But to your point, Aaron, about, you know, the market responding to positive vaccine news, I would argue that's what this whole move was, and the week leading up to that day. But outside of that day, we obviously had we opened way higher that day, and we ended the day down from the open. But it was just a steady march up. What really saved the market first and foremost was the Fed. This was the day, March 23rd. March 23rd, 2020 was the day that Jerome Powell came out and said, yep, we're not going to slow play this like the Fed did in 2008, 2009. We're going to throw all our bullets at this thing, right? And that was the bottom. And that got us to here, the vaccine, which got us to here, right? So in the ensuing year, we've had a number of new variants, right? But two major ones, right? We've had Delta, and now we have Omicron. Delta variant seemed like to be more contagious, less deadly, right? Omicron, again, obviously it's probably too soon to say for sure, but let's just pretend hypothetically that it is roughly the equivalent of the Delta in terms of severity.
Right. I think that's fair. I think from everything that we've seen so far, the consensus is that symptoms of the Omicron variant are more mild than the original COVID-19, but it might spread faster. Who knows? So we just have to wait and see. But I think at the Bottom line is that we're seeing a lot of governments around the country act in that they'd rather be safe than sorry, essentially.
Yeah. But at the same time, we're not going back into full lockdown, right? It would take.
Oh, here?
It would take.
No, I'm not worried about. No, not at all. I'm not worried about it.
No, yeah, not in the U.S. I can't speak for other countries, right? But because we know Europe has lockdowns going in Northern Europe, Austria, Netherlands, Germany, right? I think New Zealand also is back into lockdown, or maybe I made that up. But yeah, in the U.S., it ain't happening, right? Unless we get some other crazy shit going on. But probably that's not likely. I don't know. Maybe it is, but not going to happen. Regardless, my point was you haven't gotten dips like this very often, right? We basically had a 3% drop, right? From Tuesday or Monday, last Monday, right? That's what that was. Monday to today, 3% drop about. You don't see 3% drops in the SPY very often or in the Qs, right? My hunch would be that we end the week higher. Here, let's pull up a weekly chart. We end the week. Here's a weekly chart of SPY. We'll zoom way in here. You can see. My hunch would be, so we opened for the week. We opened at 464. My hunch would be we close the week higher on the SPY. That's what I'm thinking. And that would mean, Aaron, if I'm right, that all your reopening stocks all your stay-at-home stocks, like your Zooms, right, Peloton, etc., probably resume their downtrend, if I am right. I can't envision a scenario where the SPY goes up and Zoom goes up. Because they have not... There's been an inverse correlation for the last year, right? Basically all year. So if I am right, then Zoom ends the week lower. Peloton ends the week lower. Right? Zoom actually is lower for the week, but you just have that weird pop the other day. Gosh, look at Zoom today. Down to 209. Wait, so I'm confused. Oh, wait. AB just stepped out. Okay.
Why are you confused?
So you bought this freaking fruit fly. So you bought the 215 calls.
Yeah.
In Zoom, and they're still. Are they still up?
They're even right now.
That's what I would have thought.
Yeah. So I think this is right around when I bought them at. Again, when I was looking at the chart, I called out that we could see a double bottom reversal pattern if we blow through this resistance, essentially where we're at right now, and it keeps moving lower. Then yeah, I might open something on the short side just to kind of hedge myself.
Happy has a good point too. It's not as if we don't have. It's not as if the Omicron thing is the only catalyst, right? We do have the jobs report. How relevant is the jobs report really now? Because we're not entirely, but we are almost all the way back to where we were pre-COVID in terms of the unemployment rate, right? Because pre-COVID we were at 3.7, 3.6.
Well, it's a double-edged sword, Spencer, right? Because last time we saw a really strong jobs report, the markets actually moved lower because people assumed that, hey,
Right.
this strong jobs number is going to lead us to raise rates, that the economy is getting so strong that the Fed will have no choice but to raise rates right now. And if the jobs number is bad, then stocks are down too, because it's like, hey, look, the economy is not recovering as quickly. Who knows? Maybe if the jobs report was bad, the stocks would have been up because people are like, oh, now the Fed's not going to raise rates.
Yeah.
I don't know. Either way, we don't know exactly. I'm fine, Spencer, if Zoom's lower than it is right now. I don't want Zoom to necessarily be higher by the end of the week. I just think for today, tomorrow, we might see more buyers coming in there.
Okay. And you're right about the bad news being good news being bad news. But now that's out the window because the Fed has already played. They just played their hand, right? The Fed just played their hand.
I don't know
They
why. I don't know what Powell was thinking, talking about speeding up the tapering on a day like today, where markets were already red from the from Omicron.
Yeah.
He should have came out and only talked about Omicron, saying,
Oh, man, it's like, dude, the market is so jittery, right? Like and this is like, you know, I'm not one of these like people that pays super close attention to the Fed all the time and every word they say. The one thing that Powell was criticized for was, and this is I think before COVID, right, was not always being like the best communicator and not giving the market a clear signal all the time. That's all the market wants, is like a clear signal, right? So they just played their hand last month, or our last meeting. They said, this is what we're doing. We're going to slow down the taper, okay, starting now, right? And then you sent out a parade of Fed speakers to make all these speeches, and consensus seemed to be, okay, rate hike probably in the second half of next year, right? At the rate we're going. And that was, the market liked that, right? Because they're okay. We have expectations. And for him to come out today and sort of shuffle the cards a little bit, you're right. Probably not the best thing to say on a day
yeah,
like today.
and Jason's right. Jason Lively in the chat's right, though. He's saying, talking about speeding up the taper because the taper should be done before raising rates. Right.
Yeah.
Before the Fed raises rates, they should, essentially taper off that bond buying program. But my point was just that, look, on a day like today, when everyone's scared about this one thing, then you're going to add something on top of that one thing being Omicron. He's going to add on top of that, hey, now we're going to speed up that buyback program. Just that didn't seem like a good time to communicate that message, regardless.
Not buybacks, on sell-offs, technically, right? They're oh no, wait, they're not even selling. They're just slowing the rate of their buying.
Yep, exactly.
We hadn't even gotten to the selling yet, guys. Do you remember how long it took? Remember, like 2015, I think, was when the Fed said, because the Fed had bought all these assets during the Great Financial Crisis, right? The Great Recession. They had bought all these bonds, and for 6 years, 7 years, and then in 2015, they're like, okay, time has come. We're going to start unwinding our balance sheet. We're going to start selling these securities back, and it took them like 4 years to do it in like a nice, orderly fashion. And that the amount of assets on their balance sheet then, from the peak of after the Great Recession, was like a molehill compared to what they have today. It's going to take like a long time for them to like orderly unwind their balance sheet and start selling, because we haven't even gotten to the selling yet. It's just slowing our buying. So, gosh, everyone is terrified for, the Fed kicking the can down the road. I don't know. I'm not that smart. Maybe we should all just buy Bitcoin and gold, Aaron. Call it a day.
Yeah, let's check in on Bitcoin and Ethereum at this point. Oh, so we saw. I didn't realize Bitcoin came down a lot too when Powell started speaking. Sorry, I'm catching up on the chat right now. Easy Mike saying, okay, producer. I don't know what that's in reference to, but I
don't know. I don't know either. Yeah, at some point today, we should probably go over what's on the calendar for today, which we will. Speedy Boykins with the reminder. But I don't want to hear Bitcoin. I don't want to hear Bitcoin as a hedge.
Let me just we talked about this yesterday, I think, when you were out, Spencer, too. But since, even looking back, right, like the whole idea or the idea presented by a lot of crypto purists are saying, hey, look, this is a hedge against the economy. It's a hedge against, the markets, whatever. And it's like, when COVID hit and the markets crashed, Bitcoin crashed too. I'll granted, Bitcoin came up higher than the markets did overall. But look, since the COVID-19 pandemic, at least, Bitcoin and Ethereum have been correlated with the markets overall. That's not to say they'll be correlated and connected, connected forever. But right now, there's certainly a correlation there.
I'm sure there's research to support this. You can definitely say Bitcoin is a hedge in the intermediate term, maybe even the long term. But in the short term, on any given day, no, absolutely not. Bitcoin moves. when stocks crash is a strong word. When stocks go down hard, Bitcoin goes down hard. ETH goes down hard. Money moves out. It's not like money rotates out of stocks into crypto in the moment, right? That's not how it's worked. To Aaron's point, just go back and look at March of last year, right? You would think that March of last year would have been like the time for Bitcoin to show how inversely correlated it is to stocks. And it was not. Granted, it was still a great time to buy Bitcoin, but it was also a great time to buy stocks. So maybe long term it is a hedge, and I speak as someone who, obviously owns Bitcoin. But on any given day, no hedge. Sorry.
No hedge.
No hedge. Okay, I'm just making sure that all of our guests today have the links and are good to join, because we got a lot of guests joining the show today. We have our first guest is going to be at 12:15. Yes, 12:15. We have the co-founder of Adagio Therapeutics. Ticker is ADGI. Tillman Gerngross will be on at 12:15. At 12:30, we've got Jack Abuhoff, who is the CEO of Innodata, ticker INOD. We've got Robert Roy on at 12:45 from WealthbuildersHQ. We've got Tim Quast on the show at 1:30. I'm sure he has great thoughts on today. So we got a lot going on today. But let me make sure that all of our guests... I feel out of the loop because I missed like one day. And missing one day is enough to like throw off my entire week. So I apologize if I seem discombobulated. It's because I am. Because...
Yeah, easy, Mike. We might have to play that video again today for people that may not have seen it last Wednesday. But if you're new, we did a little man on the street video where I go around essentially just asking people silly questions. Pretty fun. We had a good time filming that. Maybe that'll be a good shake up for today while everything else is so, dire.
Just to be clear, that video was recorded before Aaron violated the PDT rule.
Correct. And before we knew about Omicron.
Well, that wouldn't have made a difference. Probably. I don't know. Maybe it would have. Dude, I got so many emails, man. I can't even keep up with them. If you emailed me and I didn't respond to you, I apologize. How about that? Boom. Roasted. Nah, I don't have to look at my email for the rest of the day. So, okay. We have non-transitory inflation. We have a market that does not know what to think here. Because if it knew what to think, we wouldn't be down like this. We have Aaron trying to hedge a long Zoom position. I hope he can do it. We've got Apple somehow, some way going against trend today, up 1.41% on a day where pretty much the rest of the stock market is down. The one thing we haven't really done is looked at crypto beyond the world of Bitcoin. So, with that being said...
Shout out Sadat in the chat. He's pointing out an NVIDIA call that he's saying has a lower than historic average implied volatility. So maybe that's a good deal on an NVIDIA contract if you have any conviction of which way you think NVIDIA is moving.
I was going to say, with that being said, it is time
crypto update
for how'd you know?
Crypto
update.
I'm good at guessing.
Oh, come on, Pop. Come on, Pop. Get out of there. Oh man, look at that. Look at that. And I know the performances, the percent changes they may not line up with what you see because the time frames are different, but we have a solid mix on the screen today. I was very curious, Aaron, to see how, not really Bitcoin per se, but like how like the rest of crypto, like how like ETH especially, ETH and like the shitcoins, ETH and like SHIB would react out of the holiday. because I really did expect there to be a pop, and there was a pop. There definitely, if you were watching it on Thursday night, ETH was trading up, like 4% on Thursday night, I believe. I was watching it, and all that kind of got undone by the Omicron thing on Friday. But heading into that, there definitely was a not very dramatic, but there was a post Thanksgiving bump in the crypto world. Today, SHIB was up 19%. Wow, go SHIB! Congrats to everyone.
I think Kraken just announced they're going to
They
start
did.
having trading on SHIB on the Kraken platform. I've actually used Kraken before, Spencer.
Kraken is one where, like, I don't know. I wish I had done more research when I opened up a crypto account. I guess I can still open up another.
I only did Kraken because I was looking at which different platforms had like the best staking.
Staking. Yeah, that's what I've heard that about Kraken too.
Yeah, so when I bought some I bought some Cardano a while ago that I was staking on Kraken. I've since sold it. I'm actually out of all my crypto positions.
What?
Yeah.
For real?
Yeah.
Why?
I just needed to free up some cash. You know, holidays coming up, needed to buy the fam some gifts. And I took some crypto off the board to do that.
All right, to each their own, man. I'm gonna be buying.
Yeah, I'm gonna be buying more crypto too. Trust me. Don't think I'm just not gonna have any skin in the game. Of course I am. I just I go through phases.
Okay, and yeah, I like whether it's Kraken, whether it's Coinbase, whether it's Voyager, like there are a lot of good options out there. Okay, and some of them have higher fees than others and do different things than others and have different coins than others. But like, don't do what I did. Don't just randomly pick one, because especially in crypto, it's different in stocks, right? Like the difference between Robinhood and Webull and TD Ameritrade, marginal, right? Marginal. Way more difference in the amount of coins that are offered on the different crypto brokers, and do your own research. Find one that works for you. Don't just do any mini money mo like I did. I use Coinbase, not Coinbase Pro, just Coinbase, and literally because I just decided one day to do it, not because I liked Coinbase for any reason. They should have given me shares on the IPO. Actually, no, they shouldn't have. I wouldn't have wanted it.
On Coinbase?
But yeah, no, I wouldn't have wanted it. But as a reminder, the crypto segments that we do are brought to you by Voyager. If you need an incentive to open a crypto account somewhere, check out Voyager. You can sign up using the offer code ZING, ZING. Fund your account with $100, make your first trade, and they will give you $50 in free Bitcoin with that offer code. So if you need an incentive, there you go. I'm not on Voyager, but I know Luke has his money there. Jason has his money there, and I think they're also along the stock. I've heard good things. That's all I'll say, because I've never used it. So anyway, Aaron, you know what I want to tell you? This is embarrassing, actually. I almost fell for a crypto scam.
Really?
On Thursday night.
Was someone like, send me your money and I'll make you some money? What was it?
Yep. So here's what happened. So I was sitting on it was after dinner. We eat Thanksgiving pretty early in my family. Like, we're usually done by normal dinner time, because we just like to do that. So it's like 7:00, right? Everyone's done. We're on the couch, just watching football, hanging out, and I get a text from Joel. Here, let me read you what the text said. I was like, oh, that's weird. Why is Joel?
Did Joel fall for it? Or was it not really Joel?
No, it was definitely Joel. And Joel goes, hope your travels went well this morning. Did you see what Kathy is doing right now? Live on YouTube. And I went, huh. I'm interested. Kathy being Kathy Wood.
Right. Naturally. I'm interested. He didn't send me a link or anything. So I had to go on YouTube and I searched Kathy Wood Alive. And the first video, or like the third video that I find, was this page. It was
It was from a YouTube channel. It was called like Ark Invest something. There was like something after. It was like Ark Invest Now, or I know Ark has their YouTube channel, but it was a live video of an interview Kathy was doing with someone, and I felt so dumb for this. And like on the screen was the URL arkgives.com. And it was the usual shit, right? It was the usual, send us a Bitcoin, we'll send you 2. Send us an ETH, we'll send you 2, right? Send us 5, we'll send you 10. And obviously I know that's a scam. But there was something about like, it was Thanksgiving, right? Like give back to the world.
You thought
Right,
they were doing like a Black Friday.
Yeah. And like it just didn't click in my head right away. And there was like QR codes on the screen, obviously, right? And I actually went to like scan the code. And I went, wait a minute. This doesn't, wait a minute. So then I rewound, you know how you can like rewind a live video? I rewound the video to the beginning, right? Of the interview, of the live interview that Kathy was doing. And yeah, it was not live. It was an older interview because they referred to the price.
It was with Jack Dorsey, right?
No, it was not. It was
Okay.
It was with a Bloomberg reporter who I don't really know. But they referred to Bitcoin. They referred to the price of Bitcoin at like, it was like 35,000 is what they said. And I was like, oh, okay. But something about it being like Thanksgiving, the keyword there being giving, and Ark gives back. And I know the give us one will double what you give us. I know that's a scam, right? It's a scam is on its time in crypto lane, but like I damn near like I actually like I got Ariel, my fiance, I like got her phone, and I was like, give me your phone. I want to like see if I can scan this code. And then I was like, whoa, Spencer, stop. What are you doing? And I was like,
what was Joel doing watching that video?
oh, that's a great question as well. So this is around the so I texted Joel, and I was like, I said, wait a minute, Joel. And so this is like 10 minutes, 20 minutes later. This because the 20 minutes ensuing were me watching the interview. Because first I thought it was live, and then I was like, wait a minute, why the hell would Kathy Wood be live streaming on Thanksgiving, even if she didn't want to give back? Anyway, so I go, first I acknowledged that Ethereum was higher because I thought it would be. And I said, Joel, I was right. I told you. And then I go, wait a minute, Joel, this is definitely a scam. And by the way, if you go to arkgives.com, I think it's the dead URL now. But he goes, scam by who? And he goes, yes, I'm assuming that it's pre-recorded, but that it was released now. And I went, no, it's an old interview. Because, again, they referred to Bitcoin as being down at 35,000 or whatever. So that was the end of the conversation. But I almost felt so, I mean, I did feel dumb. I felt dumb. Right. But I almost was like, whoa. Like, and because I've never like come that close before. And then I told Mitch and Andrew about it, and they were like, dude, you don't watch enough crypto YouTube, because these scams are like every single day. But it was something about it. It was Kathy, it was Thanksgiving, you give back. And I was watching football, I was like half paying attention to what I was doing. And I yeah. So that was my story. I didn't really like come that close, but it was definitely the closest it came to the point where I was actually holding up my phone or her phone to scan the code on my phone, right? But that was dumb. So moral of the story here is, Voodoo is asking a good question as well. It was almost past my bedtime. But moral of the story here is, please be careful out there. Don't fall or almost fall for crypto scams. They happen all the time. Nobody asking you to send you Bitcoin or send them Bitcoin is legit. Okay, don't send anybody Bitcoin unless you like know them for real. And nobody will pay you back twice what you gave them. Just don't do that. Just that's the moral of the story.
Spencer, I'm shocked that they were able to get you that far, but I'm glad you didn't end up shelling out any of your hard-earned money.
Yeah, and because I just bought more Ethereum last week, right? And I was like, hey, look at ETH, it's up 4% tonight. And I was feeling pretty good about myself, and then, man, yeah. So yes, don't do that, people. And I didn't fall for it, but I felt so dumb, like I almost fell for it. And all I had to do was rewind the video to the beginning and see that it wasn't live. It was just some interview they just stripped from some random interview on Bloomberg, right? And it was like ARK Gives. Let me go to ARK Gives right now. ARKGIVES.com. Yeah, the page is nowhere. Anyway, screw those guys.
To be found. Yeah, so I do want to talk about Twitter a little bit today, Spencer, since you weren't here yesterday to talk about Twitter with us. And another headline that I found interesting yesterday, maybe not as a big deal as the Twitter one, but like I said, I found it interesting that I want to talk about, and that's eBay. So eBay went out and bought SneakerCon, which, so for some more context, so eBay started using SneakerCon in October of 2020, so about a year ago, to
what is that? Oh, you're going to tell me. Okay.
To authenticate high value footwear sold on eBay. So say I go to buy a pair of Jordans that are special edition that are $2,000, and I want to make sure, hey, these are real Jordans. They aren't fake or anything. That's what SneakerCon, their partnership with eBay was for. And I guess eBay saw SneakerCon's value as so high that they went out from this partnership that they've had for about a year and went out and fully acquired the company. So what's interesting about this, Spencer, is this comes as some competitors in the sneaker shoe resale space, such as StockX, are looking at going public. And essentially this move is eBay saying, hey, we want to be a player in this game. We're willing to invest some money to keep a foothold in this market. And you may ask why. Like eBay sells a bunch of stuff. Why are they going to invest in the sneaker market? So I'm going to show you. I'm going to pull up a report. Let me find it real quick. Here we go. So this comes from Cohen and Co. I don't know if you're familiar with them, Spencer.
Cohen and Co. Investment bank. Yep. You say Cohen. I say Cohen. What do we got here? Whoops. Sorry.
I guess it is Cohen because Cohen would be Cohen. So this is a report they put out about sneakers as an alternative asset class. And here's the kicker right here. Right now, the streetwear and sneaker resale market is north of $2 billion in North America. Cowen and Co. projects it to reach a $30 billion market by fiscal year by 2030. So in 8 years, they expect this market to grow by $28 billion. That's no chump change. So maybe eBay, to me, Spencer, is saying, okay, we're okay with maybe not being the leader in this like a StockX, but as long as we're a player in this and this industry grows, as some people are projecting, that eBay will be able to make some money off this SneakerCon deal and be in an alternative to StockX, to other sneaker resale sites.
Interesting you mentioned this today. I'm going to go back to Friday when I was at the mall. And I walked past a store called JD Sports. I don't know if you've heard of it. You may not have. It's fine.
Nope.
I frankly don't really know what it is either. But it's like a high-end footwear. I don't know. It's basically a store for sneakerheads, right? And fashionable footwear and high-end Jordans, right? The whole thing, right? And it was the only store in the entire mall. No, that's not true. This store and Claire's, were the jewelry store, were the only stores in the entire mall that had a line out the door with like a velvet rope and a bouncer and everything, right? They were not. It was insane.
Interesting.
Like, yeah. JD Sports was the store. Them and Claire's, the only two stores. So I walked by the store and I have no interest in going in because I'm not a sneakerhead. But first off, obviously it was full to the brim, and I saw some of these price tags and I was like, whoa, wow, you know, like again, I'm not a sneakerhead, but it just goes to show that like the market is there, right? There is a clear market, and this is Cowan talking about the market.
I guess Claire's is getting ready for an IPO.
Claire's is really?
Yeah. I just searched is Claire's public, and I'm seeing a lot of articles about an IPO.
Oh, well, there was a line out the door on Friday. I'm telling you that.
That's bullish.
Maybe. The market is there. There are people out there that think of sneakers as an asset, as an investment. That's basically that's the underlying thesis of StockX, which, for those who don't know, Benzinga's office is located in the same building as the StockX headquarters. And if you don't know what StockX is, look it up. STOCKX. Very, very, very cool website.
Oh,
Stock
another
market.
interesting thing I found while researching this is I was on StockX, looking at different things, and as I'm sure a lot of our audience knows, Virgil Abloh, the creator of Off-White, passed away this past weekend, and a lot of Off-White merchandise on StockX was like spiking after his. I mean, I think that's
Really?
A lot of times like expected with artists, but I thought it was interesting because the way StockX works is they say they're the stock market for things. So you can look at different things on there and really see a chart essentially of the value, right? And so if you look at a chart of something on StockX that's Off-White, not everything. There was some stuff that like stayed pretty stable, like some like Off-White t-shirts that like were $100, still are $100, but some shoes and whatnot spiked up like a good 10, 20, 30%.
Yeah, and I know that sneakerheads are a thing, right? I know that this part of the culture exists. But if you were to ask me to name a store, like you're going to the mall on Black Friday, name a store where you think that will have a line out the window, or out the window too. Line out the window, line out the door. I wouldn't have named that one. I wouldn't have guessed that.
You know what's really interesting to me?
The Apple Store
is looking at. Because I mean, I don't know too much about department stores, but I see Nordstrom's and Dillard's as pretty similar. But if you look at the Nordstrom chart versus the Dillard's chart, they look anything. They don't look anything alike.
Yeah, well, that's because Dillard's is not moving off of fundamentals. I have no way of proving this, but I'm convinced. This is my conspiracy theory around Dillard's. And can we pull up a chart? Here, let's pull up a chart. I'm convinced that the movement of Dillard stock. Where's my Benzinga Pro? The movement of Dillard stock is 100%, maybe not 100, 90% attributed to their own buyback. Okay, so obviously we've come off the all-time high in the past week. Finally, right? Because the stock just went up every single day. If you pull up a weekly here. This thing just went parabolic for no reason. Oh, I know they had earnings like here, right? But like the earnings weren't that good. And look at the float here. Look at the float in Benzinga Pro. Under 5 million shares. They've had a continuous buyback going for like a decade, right?
Wow.
There's nobody short this thing. Short percent float of 11%, which is, I don't know, maybe that's not super low, but it's certainly not that high. This thing it was just I'm calling it a buyback squeeze is what I'm calling it. This is a buyback squeeze. Because Dillard's, like, fundamentally, let's go back to the overview. Fundamentally should not be doing this, right? Their sales aren't really growing. Okay. I don't even know if they're profitable last quarter. Can we go into earnings and see? Let's go. Calendar. Earnings. Okay, they were profitable. Yeah, it's because they had their earnings because they have no shares. Their EPS is 9 because the denominator is so low. Yeah, this is not. Chad, if you've been in Dillard's in the last, I don't know, 5 years, let us know. This is not a real move. This is not a fundamentally based move. This move is based on market dynamics, supply and demand of shares, availability of shares, and Dillard's massive buyback. Okay. This is not, I would not hold this up as a indicator for retail at large. Dillard's is its own animal. I myself have never been in one, so I can't speak to the quality of the stores. But the fact that it's come off, let's see, what's the 23rd? That was last Tuesday, right? Last Tuesday it was $416, and now we are down to $295. So we're down $120 in a week in this thing. It took, what's that? The 10th. It took 2 weeks. No, more than that actually. No, it took 2 weeks to go up from 295 to 416. 1 week to give it back, right? Up like an escalator, down like an elevator. This thing could probably, I mean, look, looking at the daily, you can clearly see support, right, at this area. But frankly, like, I can see a scenario where this goes to 220. There was no reason for it to be at 400. No reason at all. Makes no sense.
Yeah, I mean, Brian Blockchain's pointing out that fundamentals don't matter. It's kind of
That's true.
This chart's kind of indicative of the overall market right now, right? You have a lot of fundamentals that have gone out the door, and as a result, you have some traditional fundamental traders that are pounding the table saying, "No, this can't be. Stop! Like this stock can't continue to go up." And what do? They keep going up. So. It's inertia, until we see otherwise, it seems as if these kind of crazy valuations and the market's going to continue moving the way it does.
Yeah. How are the rest of the retailers doing? Because I know there were some headlines that it was like.
Well, that was my first point.
Yeah.
Is look at throw up Nordstrom's chart as a and to me Nordstrom is well, no, can you do the compare thing on the?
Yeah.
Compare it to Dillard's, and like to me they're very similar stores, right? They're both a little bit maybe higher end than Macy's, but
I don't know. I just pulled up those four. Zoom way in. Macy's, Kohl's, Nordstrom. I was in Nordstrom for like, I don't know, 2 minutes. And let me tell you, there was no one in there.
In Nordstrom?
Macy's was crowded. Macy's was packed.
Really?
Nordstrom, not so much.
Yeah, we stopped by the Nordstroms at the mall, and it seemed to be doing all right.
Okay, all right. Maybe it was just my mall. I don't know.
I don't know. Who knows?
Yeah, I don't know. But
Apple store was definitely crowded at mine.
For 100%. Yeah, if you'd asked me pick a store that you thought would have a line out the door, it'd be Apple, right? Not JD Sports. No offense to JD Sports.
And I saw last Thanksgiving, Black Friday time, kind of holiday time at the mall by my house. I think I said this on the show before. There's a full Apple store at the mall, and they had to open another location in the mall that was just like an express checkout. Like it looked like they took over a counter from like a restaurant or something that was just in the mall. And
Really?
that express checkout, you literally like had to have a item purchased online, and you would just go pick up your laptop or go pick up your iPhone. Like it wasn't a full Apple store, but they couldn't even do all that traffic in their big Apple store. They needed to open this. So to me, I saw that and I was like, wow, that is a strong sign for Apple. And I guess at the time, let me check again, this was last Thanksgiving. So about a year ago, Apple was trading at $120 at $163 right now.
All right, yeah, and chat noted that the IWM is falling. It just didn't make a new low of the day on this recent candle. Let me pull up my charts here. So, we're just continuing the downtrend of the day. Q's making new low, SPY making new low of the day, IWM falling harder. It has not been a good year for small caps. So, don't know what more there is to say about it. We live in, what's the old saying? It's a market of stocks, not a stock market. I mean, it's a market of like 5 stocks right now. And actually, today it's 1 stock, frankly. But I don't know, Aaron. I did my part, man. I went shopping. I went shopping. Although actually, we were talking about this morning on pre-market prep. Best Buy probably is not happy with me because I walked into Best Buy with the intention of buying 2 things: a laptop, and a dash cam.
And you didn't buy either?
And I not only did I not buy either,
You ordered them off Amazon.
I went home. I did some research, found some things I liked and didn't like, went home, and bought them on Amazon.
What? Okay, I've got a couple questions for you on that, Spencer. Yeah. Hey, what is your purpose for a dash cam? Just in case someone hits you?
You don't need it till you need it. Okay. All right.
I didn't know. I don't know. I didn't know if maybe you wanted to start like a new show where you were streaming from your car or something.
No. Well, I guess I could now. No, it's one of those things where it's like, maybe I've seen too many videos. That's probably the problem. Is I've seen too many crazy dash cam videos from like Russia, and
sometimes I watch compilations of those, and then I feel bad because I'm like, I don't know if I just watched someone die or not.
Well, yeah. Well, obviously, yeah. And I've seen too many. Now my brain is poisoned, and I think it's going to happen to me. So
whatever happened to Circuit City,
dude? Same thing that happened to Radio Shack.
Okay, no. But Circuit City was essentially the same thing as Best Buy. So what did they do to lose? Was it Geek Squad? Was that Best Buy's edge over?
Well, Best Buy was able to get the e-commerce going. Wait, Eric, are you serious? Eric in the chat, dude. I hope you're okay, man. Eric just said he was carjacked last night.
Yeah,
in the chat.
That's not good.
Okay, John Leon is asking, ADGI, is there gonna be an interview yet? He wants to know. John wants to know. John, yes, like right now, as a matter of fact, because we're running over because Aaron and I waste too much time. So we have the co-founder and CEO of Adagio Therapeutics, Tillman Gerngross. He's here with us. I think it's time to bring him on the show, AB. Should we do it?
Yeah. I mean, we can go off calendar, I guess.
Well, it's 12:15.
No. Oh, okay. I'm silly.
Dude, time flies when you're having fun, man.
Jeez, Jesus, sorry.
Yeah. Tillman, you ready? Thing is ready. Let's do it.
Just one thing. The company's name is Adagio.
I apologize, Adagio.
Like Adagio. It's like, that's fine. You're not the first one, but that's why I'm prepared to correct you before we
Adagio.
go on.
I appreciate it. Normally I would blame my producers for that, but that one's on me. So I apologize. Okay, it's a good day to have you on. A good few days to have you on here because Adagio is involved in the world of antibodies, and well, here we are talking about a new COVID strain. So I guess first start with this. Tell us about Adagio. Tell us what you're working on, and then we have some questions based on the headlines of the past couple of days.
Sure. So let me take you back to the founding of the company a mere 16 months ago and how we got here. So I also run an antibody drug discovery company called Adimap, and we've been around for over a decade. We mostly do work for others. So big pharma comes to us and we discover drugs for them. In this particular situation, what happened is that our head of antibody sciences early on basically said, and she's been doing work on this for many, many years, that this is going to be a virus that isn't going to be, we're going to be at herd immunity in the fall and it's all over. She early on predicted that this is going to be a more endemic situation, is going to go on for years possibly, and you need a real solution. So again, in fairness to the world at the time, folks that know how to discover antibodies jumped into the fray and pursued slightly different strategies. Lilly, Regeneron, they were going full speed. How can we, as quickly as possible, get an antibody drug into the clinic, show it works, and then get it to patients? And I admire what they've done. It's really a remarkable feat of how quickly they got all this accomplished. Our approach was different. We wanted to have an antibody that doesn't just cover SARS-CoV-2, but in fact is able to neutralize and cover the entire family of these SARS-like viruses called sarbecoviruses. So what we were looking for is an antibody that neutralizes SARS-1, neutralizes SARS-2, and by doing that is sort of prepared for a much broader and more robust response to any variants that may emerge. And to date, we've shown that our antibody neutralizes beta, gamma, delta. And when we analyze Omicron, what we can find is that each of the amino acids that are changed in Omicron, our antibody is able to overcome and still bind to. And so that's how we got here, over the past, as I said, 16 months.
So can you explain a little more again about just like the difference in approach? Can you just go into detail about that?
The approach is that other folks took blood samples from people that had survived SARS-CoV-2, and they were looking for what are the best antibodies in those patients. Once they found them, they moved them ahead and moved them into the clinic. And what we did is we said, that's fine, but we actually want to mine a sample from a SARS-1 survivor. So from a virus that existed some 17 years ago, and we asked the question, are there antibodies in that patient that react or bind to SARS-CoV-2, a virus that emerged much later? And when you do that, you're trying to tease out specific regions in the virus that are highly conserved in nature over long periods of time, different viruses. And when you do that, you find stuff that is much more resilient against variant escape. And that's why we did that. Does that make sense?
Yeah. So the headline yesterday was pertaining to the Omicron variant, correct? And the headline was that the mutations found in this variant in particular, it looks like, at least in vitro, your drug is effective.
Okay. It doesn't talk about the effectiveness of the drug. What it shows is that our antibody meets its design criteria in the following way. We look at Omicron and we look at all the changes that are present there, and we've already checked all those individual changes. So we've looked at each of the amino acid changes that are present in Omicron, and we asked the question, does our drug still bind? And the answer is yes. And the next step now is to recreate that virus and make sure that you can show that the antibody actually neutralizes the virus. That work is ongoing, and it's going to take another month before we have that data.
Is that 1 month timeline? Is that considered expedited? Is that normal?
Yeah, it's fast, but that's normal.
Yeah.
So again,
okay.
I want to be clear. There's two different levels. The first level is, does it still bind? Because if it doesn't bind anymore, the antibody, it's useless. It's not going to neutralize. And so that's why we now know, for example, that some of the other antibodies available under EUA are going to be in a rough situation and are most likely not going to work.
So what is your assessment so far of the of the Omicron variant? We've had the CEOs of all the major vaccine makers come on in the last couple of days and say, yes, well, of the scientists that I've talked to, we are seeing this or we are seeing that. I'm sure you're also doing the same thing they are. So what is your assessment of the seriousness of this variant?
I think it's very serious. When we look at the immune response of patients that either have been vaccinated or have had COVID, we know what the antibodies look like. And so let me just paint that picture for you. Of all the antibodies that are produced by someone who's vaccinated or who has an infection, 90% of them bind and do nothing. They're not really useful. There's a small subset that bind and then neutralize the virus. In other words, prevent the virus from infecting a human cell. Those are the useful guys. The problem is that the vast majority of those antibodies that are produced based on vaccination or a previous infection bind to three very distinct domains on the virus. And this virus now, this latest version, has been able to change all three of those domains simultaneously and shake off essentially the majority of the antibody response. And when you see that, then you know the vaccines are most likely going to experience a much lower efficacy than we've seen in the past.
Is that different than Delta? Is that different than the other variants?
Yes, because Delta had changes in two areas. Again, there's three major areas where antibodies bind. And if you have one left, you're still in good shape, right? But this is the first time that we've seen a virus where all three classes are essentially affected by these mutations. That has not happened before.
Let me enter the positive spin zone here. Doesn't that mean that this Omicron variant is pretty much as bad as it can get?
That's an interesting question. You're the first one to ask me that. Is that
as bad as it points gets? For me.
Good question,
as bad as it gets.
Positive spin. I'm looking for some positive spin.
It's more complicated, but it's not just, everything is relative to the previous immune response. And I have to think about that question longer, Spencer. I don't
Okay, I appreciate that because you didn't take the bait. I threw you a curveball, and you could have jumped on, but you clearly are a very thoughtful person who didn't take the bait on that one. So I'm not upset at that answer. It was a non-answer, but I'm not upset because.
I'm curious. So we've been seeing some initial reports about the symptoms of Omicron not being maybe as serious as COVID-19. Is that in line with what you have found with how the antibodies, how the body would react to something like this?
I'm not a clinician, and I think we have to wait. This is too early to really make any prediction of, I think, what the severity of disease is. These are like individual anecdotal stories, and anecdotes aren't data. So let's just
we need the empirical data before we can have any takeaways. So what about just in terms of COVID-19 in general, maybe with the variants? How would our natural antibodies, so if you've had COVID before, how does that compare to if you have some kind of supplemented antibody resistance?
That's a great question because I just had COVID like a month and a half ago.
Yeah.
So let's be very clear. If you've had a previous infection, your body will have produced antibodies. They're going to be around for a while and they will decay over time. The same is true for vaccination. The only difference is that in particular the RNA vaccines, they just give you a higher, more antibodies. They're more immunogenic. They give you a higher titer of antibodies. And they will also decay over time. All right? So what's your question?
Just how all of that.
Oh, how does a booster? How can you boost on top of that? Is that what your question?
Right. Or essentially, is there a benefit to that, or are you essentially covered as good as you're going to get by your natural antibodies?
No, because if you take, for example, our antibody. So let me get maybe into the science of that. I told you about these 3 domains that the most antibodies bind to, that this variant has been able to shake off. Our antibody binds to a very different domain. It comes from a different angle and approaches the receptor binding domain differently and binds to a different region. And that region is highly conserved in nature. So we can go and look at SARS-1. Guess what? It's there exactly the same. We look at SARS-2. It's there, and it's there in all the variants. We look at viruses that are present in bats, and it's there. So it's when nature conserves something, it typically needs it. And that is why targeting that particular region on the virus is a strategy that essentially is intended to protect you from immune evasion. And so what I'm telling you now is you are going to have these class 1, 2, 3 antibodies floating around. And if you come in with an additional antibody, it's going to give you additional protection, no question. And that's true for people that have had an infection or for people that got vaccinated.
I'm curious, Tillman, just, in terms of the emergence of the new variant itself, I mean, it's obviously not the first variant, probably won't be the last, right? I guess on a scale of 1 to 10, can you just sort of rate, because it seemed like a lot of people were like caught off guard on Friday, right?
Yeah.
Like, whoa, and they see all these scary headlines, new variant emerges in South Africa, super contagious, blah, blah, blah. Is this something that you're just prepared to live with? Right, these new variants emerging every, I don't know, few months, year.
Yeah, so I mean, you're describing the public response, right? What most people thought, and you've heard the saying, "Masses are asses," right? The truth is, they don't know anything about immunology.
I haven't, but I like it.
The truth is, anything that knows anything about immunology will know that viruses undergo changes over time and they evolve. And so we, in particular, were thinking about that, and that's why we created the molecule that we now have in the clinic in this way that I described to you. So let me say this differently to you. When a virus emerges, the first thing the virus wants to make a living is to get into as many people as possible. So it mostly accumulates mutations that benefit what? They benefit transmissibility. That's how we got to Delta. Delta was more transmissible, was easier to get from person to person. That's how the virus can spread and basically disseminate its RNA in this case most effectively, which is the purpose of a virus. All right? Here's the issue though. What happens at the same time is that more and more people are getting infected or have been vaccinated. And so what happens is there's immune pressure on the virus now. So when the virus infects, it encounters antibodies that are already there. And the only way to make a living in that scenario is to start changing the surface so these antibodies don't bind anymore. And that is what we're seeing now. So I would say the transition from Delta to Omicron is a real landmark, because we're now seeing the evasion of the earlier immune response. And so the virus is now heading in a different direction. And that, again, is pretty worrisome in my view.
So and then as far as Adagio here, what is the next catalyst? You guys had the headline out yesterday, right? What is the next? Is it that 1 month time frame that you just gave?
Yeah, in a month we'll be presenting the data on the actual neutralization. I'm pretty confident it's going to hold up, but when you do good science, you really want to confirm things and not just speculate and hope. So that's the next step. And then we have ongoing clinical trials that are going to roll out through the early part of next year. And we will take that data to regulatory agencies and hopefully convince them that we have enough data to justify an emergency use authorization, because we believe these antibodies need to be available for folks in the winter, not in the summer. And so we are going to try to accelerate approval and getting these into the hands of doctors sooner rather than later.
So
that's a great point.
Let me try to understand the timeline, I guess, of all this. So when did you say Adagio was founded?
In July of 2020, last year.
Okay, wow. So COVID had been around for a few months. And was it just as simple as you recognized a need that, hey, there are companies out there developing a vaccine, but we may need some more antibody treatment testing on top of those vaccines? Good
question. Let me answer that more holistically. A pandemic emerges. The world first thinks, oh, this is like some artifact in China. Who cares?
Right.
Very quickly, that picture changed, as you all know, and it was clear this is going to be a global event. At that point, the world of drug discoverers, people that for a living try to come up with treatments for these types of situations, jumped into the ring and came up with solutions. And there are 3 solutions that people were working on. Number 1, vaccines. And that ended up being quite successful, but I just can tell you, that was not known at the onset. Typical vaccine development, 10, 15 years. We still don't have a vaccine for HIV. And so that's not always that you have an infectious disease and you're automatically going to get a vaccine. So that was one thing. The second thing is antibodies that the body naturally produces to protect yourself. So there was a bunch of folks that jumped into developing antibodies like Lilly, Regeneron, Vir, and us, AstraZeneca. And then there were a bunch of people that said, can we come up with a molecule that inhibits some important biochemical reaction of the virus, like replication or something, or there's an enzyme called protease the virus needs.
So how does that differ, the third part differ from a vaccine? Is it treatment after the fact?
Yes. So those are the 3 modalities, and they can be used in different ways. Vaccines, you can only use them in advance, prevention. The last molecules, the ones that you take orally, they typically are only used in treatment. And antibodies can be used in both. They can be used in treatment, and they can be used in prevention. And so here again, you have to think about, how am I going to prevent a disease with an antibody when that molecule typically has a half-life of 20 days? So in our case, we engineered the antibody that it has a half-life of 100 days. And that allows you now to give it to a person on day 1 with a single injection, and they have enough antibody in them that you can detect it over a year. And so all of a sudden, you now have protection for the long run, as opposed to the vaccines that in a year you would probably at this point have to get dosed 3 times.
So essentially, it was like an idea to create a booster before the vaccine companies were creating boosters.
Yes, it's a booster, but it also can be used by itself, standalone prevention, and it can be used if you get sick and have COVID. If we catch you within the first week, you can use it as a treatment.
Okay, got it. So do you specifically market that antibody, booster treatment to people who may be hesitant to take the mRNA vaccines?
Excellent question. We don't market anything because, we live in a very strict regulatory environment. If you don't have an approved drug and if you don't have clinical trials that show something, you're not allowed to market anything. We can talk about the characteristics of the molecule that support the kind of statement you made, but we don't market anything.
Well, I hope one day soon you will be legally able to market something, right?
Yes.
That would be probably good for all of us.
But what I can tell you is right now, we of course are designing trials where we're treating patients to show that it has the effect that I'm describing to you. You then take that information to regulatory agencies and say, hey, look, We treated 1,000 people here with the drug, 1,000 people with placebo, and look how many infections we prevented, look how many deaths we prevented, and all that. And that is yet to come in the early part of next year.
So do you ever get or worry that you're going to get, I guess, criticism from people that might say, hey, look, this, company was essentially born right after the pandemic, went public. The stock is up more than 6,000% from when it opened in August. That I guess, it's kind of like taking advantage of a bad situation. You're saying, no, we're filling a need that needs to be filled. So we might as well be the ones that do it.
It's a very interesting question. And it's a philosophical question, right? And it's funny, like, for example, for the first year, I didn't even take a salary. I was completely uninterested in the economic aspects of this. I felt we have an important solution that we need to bring to patients. And the question is, how do you do that? And so let me tell you now the ugly side about drug discovery. We have raised $800 million to date, not to pay great salaries or anything, but just to make drug that if you get approved, you have enough to treat people, costs hundreds of millions of dollars. To run these trials all over the world, you have to hire people in Africa, in Eastern Europe, in South America. The cost of running these trials is enormous. And if you can't offer a return to your investors, they're not going to invest in you, and we're not going to have these treatments. So one can't have it both ways. Unfortunately, this is a very risky, very expensive industry. And so I don't know if that's an answer that satisfies you, but I am not at all worried defending the actions that we took in response to this, because I know what the underlying motivations of the people in the company are. And I can tell you it's not, let's make a buck here. In fact, I would say there are many other folks out there where I strongly have that suspicion, but I really don't view us as being in that bucket.
Got it. Yeah, no, I appreciate it. Yeah, I mean, it is a interesting question. I was just more curious if there were those people out there like saying that, or you've ever heard that feedback, because I would definitely argue on the latter that, hey, look, that this need needs to be filled. So we're here to do that. We're willing to do that. I also apologize for I'm getting kind of mixed. That when I looked at the stock price on Google, it said it opened at 73 cents on the opening day. On a different platform, it says a different price. So I don't know exactly which one it was.
It's not up 6. We went public at around 17, and I don't know the stock. That's 47.
We got to talk to someone at Google Finance though, because if you look on Google Finance, it says 6,000%, which now I'm checking other sources doesn't seem to be right.
We're at 40. Bottom line, we're at 47 here right now. But this has been enlightening for me. Thank you so much, Tillman Gerngross, for bearing with our questions here and giving us some very thoughtful answers. Co-founder and CEO of Adagio Therapeutics, ticker ADGI. Thank you so much, sir. Have a good rest of your day.
Thanks a lot. Take care.
All right. You want to know how I know that Tillman is a scientist? Because he gave extremely thoughtful answers and was very, very hesitant to jump into the world of speculation and conjecture. Some people are like, yeah, heck yeah, I'll speculate with you. Let's go. No, that's not how Tillman operates, which you got to respect, right? You got to respect it. Let's stick to the facts here. Let's stick to what we know, right? And this is also like the downside of that is people want speculation, right? They want your opinion on things. They want you to tell them how to feel. And that doesn't really, bode well for that kind of, because that's not what scientists are about, right? They're not like, here, let me make you feel better. They only care about what they know and what they don't know. Which you gotta respect. But if you're looking for someone to tell you it'll all be okay, I don't know, find a therapist. Okay, our next guest is here. Let's bring him on right now. Oh boy! And while we're at it, I don't know how many likes we're at, but let's get some more likes here on the show. We'd appreciate that. I see Jack Abuhoff. He's the CEO of Innodata, ticker INOD. I see him here, AB.
Let's go ahead and bring him on. Can you guys see me?
Let's
I just sounded weird to me.
No, you're good.
Right,
Let's bring him on.
I'm on.
Jack, you're on.
You're
How
on.
is
I'm
it
on.
going?
Spencer, how are you? Great to be here.
Good. Great to see you. How was your holiday?
The holiday was good. And it's sometimes tough for me. My family, we're vegetarians. We don't get a lot of people saying we want to show up to your Thanksgiving dinner, but we survived this time. We got a nice little crowd. We had a great time. Thank you.
Wait,
How's yours?
that reminds me, just real quick before we get going, there was I forget who it was from. It was from someone. They were saying, okay, if you want to like save a little bit of money this Thanksgiving, look at some alternatives to turkeys with turkey price going. And then they said, and you may also save money because if you're not serving turkey, people may not show up, so you don't have to cook for as many people.
That's it.
So it works in any way. More leftovers or saving money.
Yeah, exactly.
Perfect.
That's definitely it. All right. We're going to switch gears for a second here. We're going to go from talking about COVID and talking about antibodies to talking about data. Jack's company, Innodata, obviously deals with that. Jack, I guess first tell us about Innodata, and then we can talk about some more topical, how data is in the news.
Sure, love to. So we're a technology company. We're helping our customers harness AI, artificial intelligence, in their businesses. And we're doing that three ways. If you're a big company and you've got a large data sciences team, we're helping train your AI algorithms. If you don't have a large data sciences team, we're letting you use our trained AI, our AI algorithms to integrate into your business. And then lastly, we're building new AI-enabled systems that are ready for you to license. So it's all about, if you're our customer, it's all about enabling you to gain the operational benefits and the strategic benefits of the technology.
Everyone uses like AI as like a buzzword and machine learning and neural networks. So those are all, to me, they've kind of lost all meaning. I'll be honest with you, Jack, because everyone uses them. So like, can you explain exactly, obviously part of it is a black box, but like, can you explain the part that you can explain about how exactly, like what is special here about your AI?
So how does it work? Okay, so AI is a general term that refers to machine automation. Machine learning is a subset of AI, and it refers to self-learning algorithms. And the type of AI that we're specializing in, and that is mostly being used in the environment today, is even a subset of machine learning. It's deep learning. It's neural networks, and those are types of AI that learn from examples. So you don't when you build an AI application, you're not programming it in the traditional sense that you would a traditional application. You're teaching it things that another AI algorithm has already learned, or you're teaching it through examples, through pairs, through this is a piece of data and here's what that means. And You're teaching a deep learning neural network to understand that and to base its decisions off of that.
So maybe without naming specific names, where are your clients in terms of industries? Because I was reading, you got everyone from banks to retailers, but like, where is the bulk of your business? Who are the bulk of your clients?
Yeah, so our what we're finding first is that we've got an interesting group of clients. We've got the largest Silicon Valley tech companies are becoming our clients. And then we have, running the full spectrum, we have some small, startups, very well-funded startups who are taking advantage of the technology to build new experiences and to build new things for us. And it's just a great deal of fun to, work that full breadth. And the good thing is we've got the product and service architecture. We've got the right set of capabilities to be able to work very well with that very small company and to add a ton of value to the large tech companies.
I guess I shouldn't have asked you not to name names. Can you name some of your like larger, more recognizable clients?
So we oftentimes cannot name names, but I can tell you a few that we've just been announcing recently. We're very proud of the fact that we announced our second large Silicon Valley tech company, and I'm talking from among the 5 large tech companies that people talk about all the time. With the first one we started working on, we've seen a dramatic expansion in our business with them. The second one we started working, and we're starting to see that expansion as well. We've got a third one that we've just begun working with, and we see great expansion opportunities there. And that's, Silicon Valley tech. When we shift into financial services, for example, seeing a lot of great opportunity there. Financial services is keenly interested in the technologies, but it's still early days for them. And that's creating, great opportunity. We announced a partnership with one of the largest, probably largest 3 banks in the world, to build a new application for them that is enabled by AI that helps them with some, very critical workflows at the bank. And we're working with them in a way that will enable us to then productize that and bring that to the financial services industry and even other industries where that may be applicable. When we're building AI data sets, we're working for the large Silicon Valley companies I talked about. We're looking at toxicity identification. We're looking at fake news. How do you use AI to label news that may not be accurate? We're doing things with robotics, with drone imagery. Supply chain management, that's a big issue everyone's facing. We're working with some AI startups to build real interesting capabilities around supply chain management. So it's a wide diversity of things that we're involved in. It's really exciting.
A lot of this seems like just really abstract to me, and maybe there are some parallels between what you're doing and what our last guest was doing, because we talked about investing to develop a treatment or a vaccine for COVID, right? And you need an investment, and you don't really know if that bet's going to pay off for you. You need to develop that drug over time and test it. Is it the same thing here? I mean, a company says, hey, can you do this? I guess you don't really know if you can, right? You need to develop the AI, right?
It's a really great question. We started working with AI about 5 years ago.
Okay.
We were among the first companies to be deploying it in real world situations. And our real world was our own business. Let's see if we can automate a lot of what we do. And we were successful. But we weren't initially. We had to fail a couple of times before we were getting it right. But like most anything in the world, once you start getting it right, you learn how to get it right. And you can bring that success to lots of folks. One of the most important things about AI is it's trained with data. So if you're inputting high quality data, you're going to get a high quality AI algorithm. Your algorithm is going to perform well. And importantly, we're all about data. We're all about high quality data. We're not a brand new company. We've been around and producing high quality, great data for Apple and Bloomberg and Thomson Reuters for their data products for over 2 decades. So we've taken that ability and we've pivoted it in order to enable our customers to have high performing AI algorithms. And as I said, we can help you with the data to train your algorithm. We can deploy in your environment our own algorithms to make your business hum, to make your business more successful, to enable you to have greater insight into your markets. And we can take our AI and our great data that builds great AI and build that into new systems that are ready for you to subscribe to.
How long does it take you to how long is this sales cycle here? When you get in conversations with the bank and or anyone for that matter, and they're saying what you need and they're asking what you can do. I mean, it would seem like the entire point here is for you guys to just get as many clients as you can. How long does that take? Great question.
So our average sales cycle is about 4.5 months right now.
Okay.
But that's for 4.5 months from an initial conversation to an initial deployment, an initial, sometimes proof of concept. But what we see with the large companies especially is you start small, and if you're successful, you expand quickly. So we've got a whole lot of patience for getting and strategies to get in the doors with companies, to start a POC. And then again, what speaks for us is the quality of the solution that we're provisioning. The the fact that we're able to produce such high quality data and such high performing algorithms, distinguishes us as we're doing that POC. And then if you have a company that has a budget of, many tens of millions of dollars for AI, well, they just want you involved in more and more things. And, that's
so where do you get your data from? Elsewhere?
So it depends on what we're doing. Sometimes we're responsible for synthesizing, for creating the data. Other times our responsibility is to curate the data and gather the data. It all depends on what the underlying data is, what the algorithm, what the use case is that is being served by the algorithm that's being built.
Okay, fair enough. How does all this fit into what has become an environment in which people, consumers, regulators are suddenly very concerned about data security? Who has their data? Who doesn't have their data? Who do they want to have their data? How does all this fit with that? Because that's something that is of great bipartisan interest right now.
Yeah, so I think there's data that is public data that nobody really cares about from an information security perspective. And then there's data that people care a whole lot about. And, we've got the systems and the technologies in place fortunately, to deal with both. So we handle very confidential records for financial services. For example, we handle confidential records for, healthcare companies. We handle medical records. So we've got all the systems in place. So now if you're a company in financial services, say, or healthcare who wants to develop an AI algorithm, there aren't a lot of places you can go where you can find people that are serving up AI with the appropriate wrappers that take into account information security, or are able to handle data and produce data in accordance with those requirements. We can. And that capability in itself is leading to great conversations with customers.
So Jack, our audience is mostly, retail investors, some day traders out there. And a lot of investors are looking for that next big, transformative technology, or even within AI, like what's going to be the biggest use case for it. In your opinion, what do you see as going to be, I guess, like the biggest industry within AI? Is it self-driving? Is it robotics? Is it what are your thoughts on that?
Yeah, so I imagine at an earlier point in our history, somebody asked somebody, so this thing called electricity, where do you see that going? Where's it going to be used? I don't see it. Tell me where. I think AI is going to be ubiquitous. In our business description, we talk about the ubiquity of AI. I think it's going to be in everything that we do, every system that we utilize, every tool and technology that we're using in our jobs and in our personal lives. I think we're at the very early stages of that technology adoption. The Silicon Valley, the large companies were way out ahead. Now we're seeing the financial services and the healthcare companies start to make serious investments there. So I think it's going to be everywhere. And one of the important things for us has been to make sure that we're involved in as many of those use cases as possible, that we're creating referenceability in many of those use cases so that we can rinse and repeat. We can go to other customers and say, here's what we did for, this other company in your domain, and here's what we're able to do for you. And we're able to get, off to a very quick start in performing that service for you at very high quality. So that's the key.
So let me take that one step further, because I think at the time, your example, electricity, a lot of people, kind of said with machines, like, oh my God, this is going to come around and take people out of jobs. People were saying this back in, the late 1800s and during the Industrial Revolution. People were saying that again with computers in the 1950s and 60s. And of course, kind of the opposite happened. It led to a creation of jobs instead of, putting people out of jobs. Do you think that same sort of thing is going to happen with AI?
I don't know. I think I could argue it both ways. I see the operational benefits that our AI brings to companies in terms of efficiency, and the benefits are profound. And yet I believe that every time a new technology comes around that creates some kind of obsolescence, it inevitably what emerges from that obsolescence is a new opportunity. You know, we don't get ice delivered to our houses anymore, and yet my father describes times when, you know, the Iceman would come, and you know, the people that were in that industry, you know, found other jobs and they do other things. And there are industries that exist today that, of course, never did in the days that he's describing. So I think that evolutionary process takes care of itself. At the same time, the benefits of these technologies are profound, and I certainly hope, from a humanitarian perspective, that there's enough evolution in technology and enough new use cases and newly discovered opportunity to absorb the workforce that otherwise could be displaced by it.
Got it. Jack Abuhoff is the CEO of Innodata, ticker INOD. Jack, a pleasure. Thanks for coming on the show today.
My pleasure. Thank you both.
All right. All right, AB, we're running behind, but what else is new here? Let's bring on our next guest, Robert Roy. It is a good day to have him on because, well, every day is a good day to have him on, but today in particular because Robert can hopefully help you get out of this Zoom pickle we're in. Is it a pickle? I don't know. Is that fair to say?
No,
I don't know.
I don't know.
No?
I think
All
I'll be
right.
fine. I've got it hedged on both
Okay.
ways. The only thing that can hurt me right now really is if Zoom stays exactly where it is.
Okay, good.
Into tomorrow.
Good. Let's bring on Robert Roy from WealthbuildersHQ. Let's talk some options. Rob, what's up, man?
Hey guys, how we doing?
Dude, look at his fancy schmancy
Wow.
setup. He's
Wow.
got a ticker in the background. He's got, damn, man.
Yeah, we're
What a
rocking.
master
We're rocking. Absolutely. So
You
I
got-
see you got a crash helmet on the desk. What's going on? Is the market really that bad today for you? Or?
Yeah, I had to actually put it on because, you know, go Michigan and all that, but also, you know, to protect myself from falling stocks today, falling from the roof.
But what protect? You play the downside.
Yes, today is the day for downside, Rob.
It's one of them.
I'm seeing a lot of red, a little bit of green, but mostly red.
You know, I went over this morning. We did our show first thing in the morning, as we do every day, and I talked with some of our students, and we talked about the market. You know, where it was. It had gained some back, and was it real? It didn't gain that much back. And then we talked about Powell coming on, and every one of the other Fed governors that are coming out today, Yellen's testifying as well, and saying, you know, I'm not real comfortable, so we're going to kind of ease up with her. You may see some lighter volume, some uncertainty. I mean, I've seen it before where she opens her mouth and the market just comes tumbling down. Actually, the very first time she ever spoke, that happened. Open mouth, insert foot. But, you know, we've kind of backed off a little bit on the market from where we were in the morning, and fully expected. You know, so if you look, let me go ahead. Actually, I've got my screen shared, right?
Yep, we do.
All right, so let me go ahead and grab charts. And if we look at the S&P 500 here, right, what did it do? Right, look at this intraday candle. It's a daily candle, but intraday it opened up right up here, pushed up, ran right into our moving averages and failed, right? And then when we pull on between two fib lines like this, we call it ping pong, right? It just bounces inside of there. And we tend to do that a lot day before, same scenario, right? So started out as a great day. We've given it all back and then some at this point. And again, with testimony today, I wasn't surprised with what we're looking at out there. And of course, this Omicron, or whatever the right pronunciation is, who cares? Whatever it is, that's not helping scenario any. And then when Regeneron comes out, Moderna comes out and says, oh, we're probably not going to have the same efficacy. And they're probably right. But if they were 96 and we're at 95.99, it's not the same efficacy. So we don't really know the answer yet. And until we do, I think there's an overreaction right now in the market. I'm looking for buying opportunities on dips, not today per se, but I'm definitely looking on buying opportunities for dips. Yeah,
I love it.
We've had some pullbacks.
Do you want to tell us a little more about who, what, why, when, how?
So, All right. So here, BITO.
The Bitcoin.
The Bitcoin. All right.
All right. Futures
Brand new-
ETF.
Brand new symbol, right? It's not
Yep.
out that long. I've now entered it twice. Yesterday, as we got a pullback yesterday and started to bounce, I took my second entry, which lowered my cost base a little bit, not by a whole lot, but it lowered it a little bit on the position. And I still think Bitcoin has great opportunity for this year. So if we actually do get a nice gain, not this year, I'm sorry, over the next year, if we get that nice gain, and all of these $100,000 people are talking about, these analysts out there talking about 100 grand for Bitcoin, if we make it up to 70 or 80 grand, I've got Bitcoin, I've got Ethereum, I've got a couple of other coins, I've got the BITO. I'm waiting for the actual ETF to come out that will hold Bitcoin instead of just tracking it. It'll actually hold it. I think that'll be even more interest to people. But I'm looking at Bitcoin, and if we continue to get the push, we're good on BITO. So I do like BITO. If we look at Google, right, we've pushed down into we just got down into a bearish bias now, also a ping pong type stop today, right? But we had great moves on Google, right? Get me back up above that 2,900 level, and I'm very interested in it, right? I'm not a guy that just jumps in and says, buy now. It doesn't work that way. There needs to be a plan, right? I've done that before. When I started trading in 97, guys, I had a little computer that I was renting at $400 a month that had a little wireless antenna on it in 1997, okay? And I was able to track the market. That's all it was market data. And lunch was 12 to 12:30, and I'd sit down and say, I have to trade something because I only have a half an hour and I don't want to miss out on my trading opportunity. And usually I did something stupid and traded something I shouldn't have. Right?
Yeah.
I learned very quickly, because I left that job within 6 months to trade full time. But I learned very quickly that you really need to have a good plan and not just throw stuff at the market and hope it works. Right? It's great to have other people's opinions, but it has to fit your risk profile first. I trade Google all the time. I trade Amazon all the time. I traded Booking today. It's an expensive stock. It's got a big bid-ask spread, but Booking is not for sissies. It's just bottom line. You can't. If you're concerned in the market, don't trade it. There's nothing wrong with that. It's not. Don't trade that one. And I say it all the time to my guys and gals. If you're a newer trader, you should not be trading the Googles and the Bookings of the world, right? NVIDIA, huge fan of NVIDIA, right? They're holding up decently through all of this, even with these crazy days. Right, we got a great press, and look where we are now, Spencer. If I can do nothing else today but get people to understand one simple pattern, it will elevate your trading comparative to where you are exponentially, just based on this one trading pattern. If you look at this move right here, where we push up, and we have this moving average here, the 8 moving average, 8 exponential. If you're using a 10 or anything like that, that's fine. I use 8. And we've got the 8 moving average, and we're at 323.10 is our fib line in there. That's our zero line, right? We look at this, it's called the zero line breakout trade. We are sitting right now at that location. So here's what I want to see. I don't think it'll happen today. I'll be looking for it tomorrow. If we can move above that 323.10, come back and retest it intraday and bounce, I'm all over it. And my first target is going to be somewhere up near that 340 level. 339, 338.5, somewhere around there will be my first target. My second target, if I can find my function keys, is going to be about 356.
When you say your first target, your second target, your third target, what does that actually mean, though, in practice?
Okay. So it depends on the number of contracts I'm trading. If I am trading 4 contracts, then normally what I do is I do what's called a 2-1-1 exit. I take 2 contracts at my very first target. I take 1 contract at my next target, and I trail the final contract looking for a runner. If I trade 10 contracts-ish, could be 8, it could be 12, but if I trade about that 10 is an easy number because it's called the 4-3-2-1 exit system. And that's one that I'm very well known for and has proven to be extremely beneficial. It's 40% of your trade, 30% of your trade, 20% of your trade, and the last 10% is your runner. So normally when you look at fibs, each fib line, I look at them as a standard deviation. On average, and I'm not a math guy, I'm not a math guru, don't Ask me those questions because I can't hand it to you, right? But on average, from what I understand, when you look at a 2-line move, a 2 standard deviation move is 96 point something, 98 point something % of all data points of a subset fall within that first 2 standard deviations. Well, that means by the time I move 2 fib lines, I've already moved most of the move. That doesn't mean we can't go further. If I can get to that third target, I've got a very good opportunity of getting that runner, the last one to be, and we've had it happen, where the last 1 contract in a 10 contract trade generated more profit than the first 9 did. So we scale out of the trade. I normally don't scale in, but I scale out of a trade. And if I'm only trading 1 contract, I go to the first target and I'm done. If I'm trading 2 contracts, I do 1 at the first, 1 at the second, and I'm done.
Sounds like Rob always knows what he always knows his plan, right? He always knows his out before he gets in.
Exactly. Important. Get on an airplane. I know where the exits are before we take off. No different in the market.
Okay, so that was NVIDIA.
Yep.
What else we got here on the watch list?
NVIDIA. I am looking at United Healthcare. UNH. Right? So you've got to look at the overall position. Some will say, well, we're bearish, we're bullish, but look at my overall moving averages. We had been moving up. We took a dip, no question. We've moved into a sideways compression pattern there, kind of 1 day up, 1 day down, right? Over and over again. We're down a little bit today. Here's the greatest thing about it, right? If because of where my 8 and my 21, the pink and the green line are, Spencer, if I can get up to that level tomorrow and fail, I'll take a bearish trade because I've got a clear path to my next fib line. If we move up, bounce, and take off, and the market is running tomorrow, I've got a clear path to my next fib line. So I don't even have to pick a direction on this today. I'll set back today, just kind of watch it. Tomorrow, I'll watch how it opens up. I'll give it a couple of minutes, and I'll look at the direction it's going. If it's following market, I'll trade in that direction. You've got somewhere between 70 and 80% chance of being right if you just follow market direction, because 70 to 80% of all stocks move in the same direction as the S&P.
Oh, that's a great stat. And just to be clear, it doesn't mean the same 70 or 80% of stocks.
No.
It just means if you start, that's a great stat. On any given day, pick any given day on the calendar, go look at the S&P, go look at the S&P 500 index, go look at the index components, and on any given day, based on what Rob just said, I'm assuming it's right, sounds like it's right, 70 to 80% of them will move in the same direction as the overall index, and which means 30% are your outliers. And then, of course, although one thing that sort of would seemingly screw with that relationship is the fact that the S&P is dominated by like the 5 largest names, make up like what 30%.
Absolutely, it's a big portion of it.
So it skews that probably a little bit, but
and so would a very small move. You know, if you have a move where the S&P is up 50 cents today, well, okay, that throws it off. But in general, you get a moving market. You're going to have, follow the direction of the market. Newer traders, to me, better off if they're following the direction of the market. Listen, you can make a lot of money going against the grain, no question. But is it about being right or is it about being profitable?
Right. Exactly.
I don't need to stand out on my own and say, I can do this. I want to make the money. I could care less. I'm not trying to go out there and say, look how much I made today. Nothing to do with it.
All right. If you have any tickers you want Rob Roy to look at, let him know. We'll drop them in the chat. But in the meantime, Rob, run us through the rest of what's on your watch list here today. So we ran through Booking, NVIDIA. We're on Workday now.
Yep. We got W Day in there, right?
So UNH and now Workday.
Right. We got W Day in there now. And we had, great fib move, this nice retracement down to the 618. And just for kicks and giggles here, Spencer, look at how many lines we moved. 1, 2 before our failure. Okay. That is a standard. It's actually an inverted H pattern. If you follow, think of an H that a child would draw, right, in school.
Yep.
Not very neat. But if you follow this line up, that's the long leg of your H. It comes down here, and this is upside down.
Gosh.
That is a gorgeous pattern. Well, where are we? We're down below all of our moving averages. We're below our 55 right now, which is the brown. It's a 55 EMA. Again, tomorrow, if we can pull back to that 277 on the fail, We're looking at 270 as a target. I got a great opportunity, and I'm not trying to get $7, guys. If I can get $2, $3, $4 out of this, that's more than enough. Remember, think of trading like a hamburger. You got your resistance, your support, right? On the top and bottom of the hamburger, you got the bread. Don't eat the bread. You're not supposed to eat it anyway. It's no good for you. Just try to get the meat out of the meat. Yeah. So they tell me, right? Someday I'll listen to it. But
well, why have just the burger when I can have the whole, just the patty when I can have the whole thing? No, I'm just kidding.
I know, because you may not get the whole thing, right? How many times have people seen a stock move to a level?
It falls out because it falls out the back. That's what you're saying.
There you go. That's it. And then it just rips on you and goes the other direction. Then you're in trouble.
Yeah. All right. Fair enough. All right. Interesting move here today. Actually, that workday chart. Doesn't look like it went straight up because it didn't, but actually kind of did go straight up for a few weeks.
It was a great bullish thrusting pattern. Then we got a little bit choppier when we went sideways here. We got a strong push into the end. A lot of black candles, but a strong push. And then the fail has been great. I mean, 1, 2, 3, 4 candles to get down there.
That's so, and black candle means the close was lower than the open, and
Correct.
It's so interesting that you could have in a couple week span. You have, frankly, as many blacks as you have whites, and the uptrend never really stopped for a while because this thing opened higher, even on the days it closed lower. It opened higher, right?
Correct.
Than the prior day.
The candle is based on the day, whereas if you're using a Hakanashi candle, it is based on
a what? Wait, I'm sorry, a what?
Hakanashi.
What is that?
Hakanashi. They're red and green candles, but they take into account today's close versus yesterday. Today's open versus yesterday's close, and
I've never heard of that before.
To the previous candle, it's not as common of a candle to use.
Can you show me real quick without screwing up?
I don't know if I have it on here. Let's see.
All right, I've only ever used open, high, low, close. I don't know anything about Hakanashi. Shelly knows more in the chat than I do. Sorry, Shelly. Disappoint you.
Let's see.
And then after this, I know there are some takers in chat we'll ask Robert about.
Yeah, I'm not seeing.
Okay, forget it. I'll do it on my own time. Let's do. Let's do some tickers here. I asked for them. What about Ford? Let's look at Ford. Ford, which was flirting with 20 for the longest time, still is actually.
Right. So when you look at Ford, we've got an old fib drawn on Ford.
Broke through support.
A little bit further. Right. We've got an old fib drawn on Ford right in here. Right. This 618 is at negative 618, 1965. But let's do this instead, Spencer. Watch. If we go ahead and take Ford, and what's the overall pattern Ford had been in? It's sideways. Right. Mm-hmm. So let's go ahead and draw a channel around it. But this is not a channel that most people are familiar with. Okay. Watch. We got a lot of lines in there. We're going to identify the top of that channel. We're going to hit as many points as we can. We're going to hit as many points as we can on the bottom of that channel. All right, there we go. And now we have additional lines that are drawn in there. Okay. So I have, let's see. Nope, I need 12. All right, let's do it this way. All right, so I just want to get it big enough so everybody can see it. So right now, I've got this stock sitting at that 1905 level, near it. It bounced a little bit off of it today, okay? Maybe we want to pull that up just a little bit. Yeah, let's get a couple more candles in there. So 1915 or so is where that bottom is. If we get our bounce tomorrow, I'm looking at 1980 as our first target. Take half of the trade off there. If it continues to go, 2045 is your next resistance level. It's not huge. They're not big moves, but it's Ford. It's a $20 stock. And then you've got resistance in there. If you have one contract left over, hold it as a runner and look for the potential up to 21. If we break tomorrow, Spencer, again, but it can't just be a break. I do not take breakouts. I do not take a breakout. It has to break, it has to retest, and it has to fail. If it does that, I'll get the trade. Will I miss out on some trades? Yes, without a doubt. But in one of our programs, in our power option plays, we've taken almost 400 trades this year, and we've missed out on probably 400 that we didn't take. So I'm okay with not taking every single trade that could possibly be taken. But we've got a better probability of being right if we get the failure, the retest, and the drop. And I'll be looking at trading puts then, buying
Oh,
puts. down here.
over what time frame? How long does that have to occur for?
It could happen tomorrow because of where we're sitting now.
No,
it could happen tomorrow.
mostly I meant on the long side. Like I meant like, you know, if this is still playing out, you know, next Wednesday. You know what I mean?
Yes, and I'm
Is
looking
that-
for monthly options on it. So I'm
Okay.
going to be buying at least 30 days out, possibly longer, but at least 30 days out
Okay.
on this one, right? And then count. It takes, on average, it took 2 days, 2 days. This took a little bit longer to make it all the way up to here. But remember, we're getting out of half of our channel. So when it came down, 1 day later, we were there. We kind of floated around. We bounced. Took 2 days to get to the midpoint, another 2 days to get to 3 days to get to the downside. So you got a couple of days to go between one line and the next on average for us.
Okay.
All right.
So we have some levels to watch here for four, the upside and downside.
Yep.
Let's go. Let's do a few more here. Let's go. MTTR, which is a Matterport, high flyer. Whoa. Did not look at that today. Holy cow.
Yeah. It takes a half a second because of the delay here with the internet for us to see that come through. But let's see.
Damn.
All right. So newer stock, not one that I've traded before. So what do we do? Right. Well, we can go ahead. Let's see if we can get a fib on there if it gives us enough movement. That's where we're going to put it on our move. And we made a very nice move today up into that 33.84 level a little bit. Oh, actually went up to the next line and failed off of that. I'm kind of in the middle. So get me back to the 30.80 and a bounce, and I'll look at that 34 level. I'm not looking at anything bearish on this at all. If I did, it would potentially be a day trade. If it closed up here and we had a bearish day tomorrow, I could consider that. But we're fighting that overall bullish trend. Widening moving averages, not a pattern I want to go against. So I like the bullishness of it for sure, but I need today, as it retested, that would have given you an opportunity.
What about AT&T? James wants to know. Endless downtrend, overhead supply coming out the wazoos. I mean, this poor, you know, a lot of people, you know, you got a lot of baby boomers that have had this stock for decades, 30 years, 40 years.
I get it, and they're holding on for that dividend, which is 52 cents. So not a bad dividend on a $22 stock. It was a lot better, if you had that $33 stock instead of the $22 stock. I see no relief in hand at all. If I go look at a weekly chart, if I go look at a monthly chart, and we've got some support down here at about $21. If you're holding on to it, it's not what you want to hear, but there's not a whole lot you're doing there. I mean, if you've got it at a higher price, I don't want to rent it out. I don't want to start collecting income on it and give someone the right to take it away at $22 or $23, and then it moves up to $23 and you lose your stock that you bought at $30 or whatever the price was. So
this is tough, man.
It's kind of that hope and prayer, right? They don't belong in the market. Hope and prayer, neither one of them work. I tried them both. Listen, if you're praying, please, Lord, let it go up. There's someone else praying, please, Lord, let it go down. So I think Lord just keeps out of the market. You're kind of on your own.
All right, let's do one for Black Rose Goat. Let's look at PayPal. A little bit at least, you know, same downtrend. At least, you know, better prospects for growth. But same downtrend here for PayPal.
Yeah, so there's definitely some stuff going on there, right?
No dividend. Right?
Yeah. Not sure. Does it have dividend?
I don't know.
Yeah,
I assume it doesn't. I could be wrong.
Yeah, I don't see anything on there. Usually I see a D on there if there is. So we had that nice move down, the good bounce up. We made it to about 236, which tells us it's a good fib. We broke, we retested, and we failed, right? And we went to the first line. We went to the second line today, right? It's amazing. People that tell me that fibs don't work just don't fully understand them, is all it is. I got nothing for them to the upside. what I'd love to see happen though, Spencer, for me to take a bearish trade on this, I need to move back up to 191 and a fail. And then I'll take the bearish trade. Now, could you take it on a break to the downside? You could, but I needed to break that 181 level first, retest it, fail, and we're looking at 173 as the next downside target. But right now, I don't see, there's no compelling reason for the stock to go up. Earnings is what really pushed it hard. I've got no compelling reason for it to go back up.
All right. What about Moderna here? This is actually, obviously stock that's subject to headline risk on the upside and the downside. So not sure what kind of patterns you can find. Of course, you can find levels for us here, but this was, man, what a strange one, because Moderna was so out of it. The stock had gotten so overdone. It was so out of favor, and now all of a sudden it's sort of back here with the Omicron variant back relevant once again. But I'm curious what you see here. If
so
anything.
right now we're kind of in the middle of nowhere. We gapped up 3 days ago. Yesterday, the gap up. Today, the gap down. We're all over, and we're going to be very news driven on this trade. No matter how you slice it, it's going to be very news driven. I talked about this one this morning in our show, and I went through the pattern of where we were, and we were looking at pre-market being down. I said I'm a little bit hard pressed with Powell speaking, Yellen, the governor of the Feds, and then on top of that, being in this overall bullish pattern in the last couple of days, how we have gapped up. But if you're going to take the trade, you always look to take it off an existing line. We broke down through here. We pushed back up. If you felt confident enough that it got close enough to that fib line and rolled over, there was your opportunity to take the bearish entry. But right now, I would be more of, I talk about three positions of the chair, Spencer. Position number one is a day like today with this stock where I'm really not doing anything with it. And I'm sitting back here and I'm just watching. I'm not doing anything. That stock gets back near a key level. It closes near a support or resistance level. It puts me into an upright position. Now I'm focused on that chart. Day three or the next day, the next position is we start to bounce. I'm leaned forward and I'm on that keyboard and I'm placing that trade. Right? It just, this is an Italian thing. It just keeps my hands off the keyboard.
I like it. I like it. Rob Roy, you can learn more about his strategy, his trading. Just go to WealthbuildersHQ.com. Here, I'll put the link up on the screen now. Should be there now. Check it out. Rob joins us every Tuesday to talk options and setups and what he's seeing in the market. And Rob, hope you had a great Turkey Day, man.
I did. I hope you did as well. It was fantastic. It really was. We had a great family day is what it comes down to.
Yes,
right?
Totally agree. Could not agree more. All right. Thanks a lot, Rob. Talk to you again next week.
Have a great day. Take care, guys.
All right. It is 1:22. We'll have Tim Quast on the show in a few minutes to talk market structure on this, the day of the market reacting to many things. Story of the day obviously is what Jerome Powell and Janet Yellen has said, right? Maybe accelerating tapering, which would therefore mean rate hikes quicker than expected. I just saw a thing about odds of 2 hikes next year went up. So I think we all probably thought 1 hike next year was in the cards in the back half of the year. I had thought sooner rather than later based on just my hunch and nothing else. You know what? I'm curious here. Let's go look at, if you guys don't know what this tool, I want to show it to you right now. CME is a good Fed Watch tool. CME Fed Watch tool. Here we go. And it's basically a visual overview of what the market is predicting via the Fed funds futures, right?
Just
What
quick
the market
note,
is-
Spencer. I do see Zoom kind of breaking out here a little bit. Looks like we've had a pretty big move in the last 5 minutes or so. I'm up on the trade now again. I'm wishing I didn't put this hedge out there where I bought a put against my calls. But
You can't have it both ways.
No, but I mean, all right. So what am I looking at here?
All right. So this is the CME's Fed Watch tool. Just Google CME Fed Watch. Again, this is a look at what the market is predicting as far as interest rates via the Fed funds futures. contracts. So this is the December futures, which we don't really care about because, the market is saying there's a 100% chance that interest rates are not going to change in December, which is not a hot take. But let's go forward and look at May here. Let's go look in May. May of next year, okay? This is where, so that checkered pattern, right? It says here, this is where interest rates currently are, right? They're currently at or near zero. The market is saying, the Fed funds futures market is saying, oh, wait a minute. There is now a 36% chance based on, again, activity in the futures market, a 36.5% chance that we're going to see a rate hike in May, a rate hike of 25 basis points. There is now a 6% chance that we see a rate hike of 50 basis points, which unlikely, hence 6%, right? And this is in May. So this is by May of next year, what that is saying. If you fast forward a few months, let's fast forward to July. Look at that. You actually have the market saying, we think there's better odds of an interest rate increase than to 25 basis points or up 25 basis points than there is of no increase, right? And then you can just, the further it out the curve you go, the greater the odds get of more hikes. And also when we're getting to next fall here, we're talking about maybe more than one hike. Like in March, if you go to March here, you see there's a 1% chance of interest rates in the 50 to 75 basis point range. That would have to mean one hike of 50 bips, right? But if you go out to September, this is out far enough where you're thinking, okay, maybe by this point we get not one but two rate hikes of 25 basis points. So basically the story here is that this is always changing. Okay, I looked at this last week, and I think I looked at the June last week, and it did not look like this. I'll tell you that. I may have looked at the Julys. This is what I use whenever I want to see, okay, what does the market actually think the Fed's going to do as far as rates? And then that informs my opinion, right? So in this case, the market pretty confident, very confident in the rate hike next year. Growing more confident in probably two rate hikes next year. Here, let's go out to December of next year. Look at that. 26% chance that interest rates will increase 75 bips. That could mean as many as three rate hikes, right? 1, 2, 3 by December of next year. That's what the market is saying today. But this is always changing. So keep an eye on this tool, bookmark it, whatever you have to do. It's the CME Fed Watch tool. Highly recommended.
Why? I'm trying to figure out, because it looks like at least QQQ has been pretty stable since its big drop when Powell spoke earlier this morning, but the VIX is skyrocketing up. Like it almost looks like as if something happened in the last hour or so, the way VIX has moved, and I don't know why that is.
Why the Qs have moved? I'm sorry, I was reading.
No, the Qs haven't really moved. The VIX has moved up a lot to the point where it's like almost like it's moved up like 4% over the last hour or so.
Yeah,
just because SPY is moving down, maybe. I don't know.
Well, the VIX is its own thing, right? That's its own thing.
I know. I'm saying that it almost looks as if there was like another headline that would cause the VIX to move like that, because you saw the VIX spike up when Powell started speaking, and then it was flat for a little bit, and now it's moved up again. I don't know. I've been on the stream, so I don't
know. I think they're done, man. Haven't they been done, Chad?
Yeah,
I think they're done.
But wait, I want to show. I want you to see this real quick, Spencer.
Yeah,
so
show me.
You remember last year, after the Thanksgiving holiday, we saw kind of a big increase of COVID cases. That was kind of like one of the big. Okay, if you say so, I don't really remember that, but if you say, I'll show you.
Okay.
So, This is just like the overall COVID cases. So this was last Thanksgiving. 2 weeks after that, we reached at that point the high. Then Christmas rolls around, same thing. Kind of like people were asserting, people gathering for the holidays, COVID.
Yeah, okay, for the winter, for like flu season. Yeah, I got you.
Yeah.
Yeah.
So I was curious. So if I go to the last 30 days, right, the 7-day rolling average is
holy crap,
80,000. And this was the cases reported yesterday, 216,000. So the most reported cases in a day in the last 30 days. I'm honestly not too concerned by that. If tomorrow we check and today was, because the Mondays are always the highest, right? Because they get caught up on testing over the weekends, whatever. So if tomorrow the COVID cases are at high again, or at least like even higher than the 7-day average, then I might get a little concerned. I don't know. I mean, to me, that's a big number, right? 216,000 new COVID cases in one day when the average is, less than half of that.
Let me tell you why obviously that's concerning, right? But here's my idea as to why the stock market may not care as much as you or I might care, or we might care for society. I feel like, and maybe this is the sign of the times we're in, and I shouldn't be saying this, but I feel like at this point there was such a strong desire to BTFD, to buy the F and dip, that even if we do see a dramatic increase in COVID cases, to the point, even if I think it's doubtful, to the point that lockdowns in the U.S. are considered, even if we get there, don't you think people will just come in and buy the dip anyway? They saw what happened last March, literal V bottom, right? You had basically no chance. It was a 105 mile per hour fastball that most people missed last spring. I don't feel like the buy the dip spirit is broken.
I don't think so either.
It will break. It will break, but it is not broken yet.
Well, you could also make the argument that if we do see these COVID numbers continue to increase over the next week, that there will be kind of the opposite of what we heard from Powell today, right? Maybe they'll say, okay, now we're delaying our bond buyback.
Right. Right.
Because the last thing they want to see, the Fed wants to see, is unemployment rising again. Because then if the Fed sees unemployment rising on top of inflation rising, then, then they're kind of losing their britches and they got to kind of like reassess everything. So to me, the Fed has proven over this pandemic that they're willing to take on some, inflation as long as they're saving the jobs, right? That was kind of like the opposite of what we saw in the 2008 crisis, that the Fed was less willing to act and more conservative, you could say. And as a result, the unemployment's been a lot better this time around, in the face of like one of the quickest recessions that we've ever seen. So I don't know. I think when you take into account, we'll watch this week. We'll see if this. If I had to guess, Spencer, I would say that I would expect this number tomorrow to be a lot lighter than it was today.
Well, I certainly hope so. But even if it's not, I don't think. Maybe this is the case in individual stocks, but like in the broader market, the buy the dip spirit is not broken. It really is not. Actually, I would argue, it's never been stronger. Now, if we're talking about the SPY and the Qs versus like DraftKings, right? That's a different conversation. Because the buy the dip spirit is probably, or Penn, right? Those stocks have been brutalized this year. It's been tough. Maybe, yes, there is no buy the dip spirit there, but there is a strong buy the dip spirit in the overall market. So I just can't even if like COVID gets so bad again, I just can't even envision a scenario where the market, like, I know I'm going to eat these words. I know we're going to have a sell-off and I'm going to eat these words, but I just really, like, it will take something else. That's my point. It will take something else for a 10% 5% drop or more.
Yeah,
It would take something else.
I
I don't know what.
So these are those Zoom calls that I called out earlier. We are seeing a little breakout on Zoom. So those calls are up 30% now, $200. Like I said, this would be the time where I'd be looking to take some profits, trim my position if I were able to. But this is just me kind of reaping what I sow, if that makes sense.
You know, it'd be so interesting. I'm still on this topic of COVID cases and going up and the market's reaction. It'd be so interesting if the market does go down and all these beaten down stocks of 2021, like the casinos, like Zoom, like Peloton, all these stocks that have gotten just wrecked this year, not necessarily just stay-at-home stocks, just beaten down stocks, right? Because they're not totally the same. If they come back, right? If there really is an inverse correlation on the way up too for these stocks, if the market goes down and they go up, I don't know. Something to think about.
Yeah, real quick, I see Tim just joined us. So real quick before we get to Tim Quast, I don't know if this is how this works, but what if I had an angel investor that got my account up to $25,000 today? Then would I be able to close this position, or would I still be on that day trader restriction?
Dude, I don't know, man. I don't know. Angel, why is the angel out there somewhere?
I don't know. I'd put that ask out there. I'd say, hey, look, I'm up $200 on this trade. I'll split it with you. You'll get a free $100 if you give me $25,000. So you send me $25,000.
If you wait. If they gamble your money, is what you're saying.
If they send me $25,000, I send them $25,100.
This is you're gonna create your own kind of a crypto scam, man. That's what this is.
Essentially.
Don't send Aaron Bree your money, please. If you're watching the show,
I wouldn't ask the audience. I'd ask Jason.
He might do it. It really depends on his mood, right? If you catch him on a good day.
If he's up, yeah. If his portfolio is green, there's a good chance he does it. If it's red,
if you catch him on a good day, catch him on a bad day, not so much. All right, well, let's bring on Tim Quast here. Let's see how the market structure is affecting the moves today. Where is he at? There he is.
Tim Quast, how's it going?
Good to see you. Well, thank you, AB. How are you? Nice to see you.
Good.
Spencer, welcome back.
I'm doing well.
Thank you, Tim.
As well.
I'm back and my hair's doing weird things, but whatever. Tim, how was your holiday?
Well, it was interrupted by COVID. So other
what?
than that, yes, right now I am coming to you from COVID Central. I have COVID right now.
Geez.
I would have been in Austin now. I've got a board meeting in Austin tomorrow. So we came back from a better part of 3 weeks traveling. You'll recall. So I went to Atlanta, went to Boston, went to Charleston. And as tends to happen, we came back and got a head cold. And we thought, maybe we should check just before we board an aircraft. And son of a gun, if this head cold isn't COVID. So
that's exactly what happened.
Yep. Did that happen to you too? Yeah. Yep.
Yeah, it was a head cold, man. I was like, whoa.
Right.
Why am I congested all of a sudden for no reason at all?
So Tim's one of those cases that we just looked at on Google.
This is all his fault. But how are
I'm vaccinated? Yep.
So other than that, you're feeling fine, right?
Yeah, I had a fever for a couple of days. Felt pretty wrung out for a couple of days, but it's I've related in the a market desk note that I think back on I used to travel 100,000 miles a year. So it was not uncommon for me to be miserable and traveling all over the planet. So this is a bit mild by comparison, but yeah, it's a cold. That's what it feels like to me. Yeah. That's
what it felt like for me as well. But it's good. It's good to hear that you're doing well.
Thank you.
All things considered. Yeah.
Right.
Wow. So other than that, how was your holiday?
Well, we had a fabulous time leading into it. It was great. So I'm just grateful that we weren't with our families. We had decided this Thanksgiving, after coming off the road, we wouldn't be with the family, and and good thing we weren't. My mother-in-law is moving. She's moving from her home to independent living. It's it's a step and so now we're taking heat for coming up with this to get out of that, because you came down with COVID to get out of the move.
Yeah,
this
funny.
is a little entertainment apart from what's occurring in the markets today.
Yeah, so Tim, I missed you yesterday, but I just want to real quick get your thoughts on Friday's action, right? Because the timing really couldn't have been worse from the market standpoint. It was just like that's like the lowest volume day of the year, or one of like the top 2 or 3. To get a headline like that scared the market. Obviously, we kind of bounced off it yesterday, and now today we're having to reassess what Powell and Janet Yellen said earlier. But I just want to get your thoughts on Friday and just how that day played out, because it was a weird day.
Friday and then today, there are distinct reasons for both. And Friday was a half day's trading when virtually nobody professional was at the desk, and which I noted this on pre-market prep too, that this is not my idea. I stole it from somebody else, from William O'Neill and company, but he noted that Omicron is an anagram for moronic.
Yeah, and I saw that.
It's a funny line, but it sets the stage. So on a Friday, when it's a half day's trading after Thanksgiving, one day is not a trend. I can tell you what the data are leading into it. This is what we do for a living. A half day certainly isn't a trend. Machines, which can absorb readable machine language news, they can absorb anything, but they are merely programmed to respond to imbalances. And there was no question there was a significant imbalance into Friday. Investment behavior dropped 18% last week. The only behavior up was fast trading. Fast trading is, we talked about this on pre-market prep, fast trading is principally proprietary trading, meaning that these are firms that trade their own money at very high speed using powerful, sophisticated computing systems that tend to be located next to the same servers that the exchanges use. And their only goal is to profit on how prices change. That's the objective. So then if you interpret that behavior to mean to be some kind of bellwether on how investors are thinking or behaving, you are misunderstanding how the market works. So the short answer is, what happened on Friday was a reflection of market structure, the behavior of money behind price and volume in context of rules, and there was a big imbalance. Passive money was out, active money was out. People weren't even hedging. Machines were in control. Market drops. People say, "Oh, it's Omicron." I'm sure that plays some role, but if you understand how the money moves today, most of it does not move in response to headlines. Only machines respond to the way prices change, and they're faster than everybody else. So then, what does that have to do with today? What's today's big market structure lesson? Today, so it's very important to know. Once again, if you're gonna be a trader in the stock market, you should know how it works. Well, as I've said over and over, I'll be a broken record again. Every last trading day of every month, there is a huge futures contract that expires that is used by, among others, BlackRock, Vanguard, State Street, Fidelity. Those together, those firms control $25 trillion of assets under management, the bulk of which anymore, the majority, is passive, and those futures contracts are used to true up tracking. So if you have a volatility event on the preceding Friday before those expire, it is going to roil the efforts of the Goldman Sachs's and Morgan Stanley's and Citi's and Merrill's to do their jobs using these futures contracts to get people square. What I mean by get square, what do I mean by that? Well, if you have an objective, we try to pursue the S&P 500 and reduce our volatility, then that futures contract has to reflect it. So we could talk all day about what people may be concerned about. We could talk about what Chairman Powell said and what Janet Yellen said, but that does not reflect the way that the market works. What happens if next week we're up 2,000 points? I'm not saying we will, but I'm saying that a case could be made for it. And I can show you that if you like.
2000, yeah. Show us that case. I'd love to see that.
Okay, so here, and folks, you can follow along. Go to MarketStructureEdge.com, and if you aren't a user, if you're a user, come join me. You hear me talk about this all the time. If you're not a user, put your name and email in, and do it for 14 days, and I send notes just about every day, and I talk about these things. So here's what you want to look at. Here is broad market sentiment. Easy step number 5, we say, is manage overall risk. We want to take gains, not chances. So if the market is telling you that there is risk, well, then don't do that, right? And I'm not talking about my longer term strategies. I have long-term investments as well and private company investments. This is about trading. If the data tell you, that's not good, look at this long ski slope here. See that? This is broad market sentiment. It is a measure of demand in the S&P 500. So if demand peaked right at options expirations in November, 17th, 18th, 19th were expirations, and we've been sliding down and we get to the holiday and the market falls off a cliff and we continue to slide right into month end, what tends to happen in new months? New months, new money. Again, I'm not saying that's going to be the case, but let me show you one more piece of data here. So that's number 1. Don't buy falling sentiment. If you do, it's an informed decision. If you're going to trade things in a market where the broad sentiment is falling, then trade only stuff with sentiment well above that level. So I could give you an example here. Let's look at, and I won't lose my train of thought, Vera. Let's look at Vera Therapeutics. So if you have plunging short volume and rising demand, so supply falls, demand rises, well, that stock's probably going to do well. It did it again right here. Demand fall or supply falls, demand continues to be right at the ceiling. That's the stuff that will rise. You have a higher probability of making returns in something like that, which we identify, than you will in the broad market. The broad market could be very challenged. Okay, so now back to the second piece of data that I wanted to point out. This is arcane data that we track internally, but it's always compelling to me because I'm a data geek. This is what I'm showing you are 20 trading days through yesterday for the stocks comprising the S&P 500. And if it's green, stocks are closing generally above the intraday midpoint. And if it's red, they're generally closing below the intraday midpoint, and by how much? So interestingly, the worst day of the entire month for the stocks as a composite was November 10th, not November 29th.
Why does it have to? Why does it have to be the intraday? Why can't it just be the close? Why not just keep it simple? Going off some exotic intraday thing.
Because the close is, what is the close? Well, let's use Walmart as an example of what the closing price is. So here's Walmart, and how many times a day does Walmart trade? 93,000 times a day. All right. So if you want to take the closing price, it's the 93,370th price of the day. Is that a reflection of what the money's doing? Well, it's the reference price, yes, but it does not tell us what money is doing. Algorithms are designed to deceive. 86% of trades occur around derivations of midpoint, might even be higher now. So what I mean by that is it's going to be pegged to time, TWAP, volume, VWAP. It could be pegged to how the market's moving. It could be floating, but it's forms of midpoint. Why? Because all stocks have to trade between the best bid to buy and offer to sell, which can never be the same. There's always a spread. The bid must always, by law, be lower. So everybody tries to get in the middle. So to the degree that that's occurring, it tells us where the money's going. So here's my answer. It's a long-winded answer, but you have me on for this purpose, right? I wanted to say, why might money come back in December? Here's why. So almost all of November is red, believe it or not. Most of the market did not perform well in November. The last time we had any meaningful ETF pattern in the S&P 500 was in the first part of November. Nothing since. Green and purple is ETFs. Here, this is index funds and active money. They sold before the holidays, as you should. That's what they did, what you should do, right? They're out. And look at the pattern now. This is a very steep drop off in demand from investors, and that's why the stock market dropped. It's merely machines going, where are the investors? Well, move the market in the direction of pressure, down. But that pattern is going to reverse. We have to have ETFs back in the market. So unless overall global macro strategies about asset allocation have changed, then somewhere in the next 5 days, the market is going to return to an uptrend. Again, I'm not promising that that's going to be the case. I'm merely looking at the data and drawing a logical, rational conclusion from what it tells us. So I think it's possible. I'm waiting for the new month. I think it could give us opportunity. There's still things I like. Tesla still looks good. You know, Tesla traded up to 1168 today. Did you see that?
Yeah, I'm just trying to like get a feel for what you're really saying here. So you, just to be clear, you are bullish, I think.
I'm bullish purely because of what the money must do unless its behavior has changed.
Okay.
Yes, I'm not certainly. I'm not concerned about moronic activity affecting the long-term condition of the market. There are other things that are of greater concern to me. But if money does what it generally does, then we're very near a bottom, and it's probable that the new month brings back ETFs, exchange traded funds. It probably brings in people's asset allocation flows to their 401k plans and so on. I continue to do it.
When you say the market brings in ETFs, you're referring to like the literal one, I think is a trillion. No, not trillion. Is it trillion? $1 trillion of inflows that have gone this year into U.S. equity ETFs or funds?
Into U.S. equities, right? 1.1 trillion.
Yeah.
That's the figure I saw too.
Right, and most of that is frankly broad-based funds, mutual funds, and ETFs, and frankly, ETFs are the larger piece of the pie, or maybe not. The ETFs are the faster-growing piece of the pie. So that's really what you're talking about here. You're talking about all the people buying SPY and VU and VTI.
Exactly. Again, I go back to BlackRock, Vanguard, State Street. You know, the world's 3 largest money managers. What do? Well, the largest overall asset class on the planet is passive large cap blend equities. So that's roughly 40% of assets. And if you think of the size of the global retirement account asset market, it's very, very large. So unless suddenly that changed on Friday, if the strategies changed on Friday when no one was in the office, I don't believe it. Now, I'm not saying we won't reassess. Then what will happen is what was already scheduled to happen. So what will be scheduled to happen in the new month? Well, probably a bunch of money goes to passive large cap blend funds. So, and if I look at sentiment is nearer a bottom than a top. The probabilities would say that we will have recovered. Doesn't mean it's going to happen immediately, but those are the things that we look at. That's how we think about the market predictively. Don't buy a falling market, buy a bottomed and rising market because it's likely to produce returns.
All right. Vera is such a random one. Let's find something a little bit more mainstream here.
Yeah, Tim, I saw.
By the way, the reason we do that is because we look at standard deviation. So if I look at Vera, this is why we do it, right? Vera was up 17%. Why? Well, because they have a huge divergence between supply and demand. That's what we look for. We're going to look for that and say that's the stuff you want to be in a falling market. So, yes, you were going to say you want something more mainstream.
I was just going to say, Tim, we had someone in the question asking about Klago, and maybe I'm picking this for myself too, but he said, can we get Tim's views on Zoom and other stay-at-home plays?
Sure.
DocuSign. I don't know. We can, I guess, look at like Peloton too. Maybe we won't get that good of a reading on this because maybe a lot of this is newer today with how it seems that the markets have been reacting to these Omicron fears or whatever.
Well, so yeah, it's one day is not a trend, but look at Zoom. So for those who don't know MarketStructure Edge, it's giving you supply and demand. Those are the two core. Those are the only indicators we care about. What is the supply demand balance and trend? And we want to own stuff that is above 5. Generally, that's the principle because it tells us that there's excess demand. On a 10-point scale, numbers above 5 mean probably more demand than supply. Then we use short volume as the supply indicator. So if here, for instance, when demand was falling, but look at supply fell off the cliff, Zoom got a few gains out of that. But look what happened. It continued down. And where is Zoom right now? Well, clearly it does not have excess demand. So if Zoom is a read on the end of the open up trade and the return of the stay at home trade, that data don't show it. So let's look at DocuSign.
And then last thing after we do this is I really want your thoughts on Apple today, Tim.
Okay.
After this.
Okay, we'll look at that. Okay, same thing. DocuSign to me does not indicate a return to a excess demand for DocuSign. Supply is weak or demand is weak. The green line here, demand didn't even get to 5 and it fell again, and supply is in excess of the trend. Those are the things that don't produce sustainable gains. Again, there are always outliers. We're just talking about central tendencies. If I look at those, I'd say, no, I prefer to own Vera, right? That's what I prefer, that at least to trade. I'm only talking, this is about short-term trading. This is not about long-term strategies, but we're trying to beat the market. Okay, so here's Apple. Apple has one good thing going and one bad thing going. Demand is very good. Demand is at the ceiling, 10 out of 10. But the supply side has surged. We have massive shorting that occurred. So there's excess supply, and that will cause price to move sideways or down. It's not bad, but I wouldn't buy that. At this point, it's not one of those that I would choose, although I like the FANGs. I think the FANGs have overall have some pretty good characteristics. Let's compare this to Tesla. Which to me, if you're gonna buy Apple or buy Tesla, which of the two from a supply demand perspective look better? Well, Tesla is just getting back to 10. It spends a lot of time there. It produces a lot of gains when it's at 10, and demand or the supply side is below trend. Demand is good and still rising. Supply is below trend. That is what produces gains. Doesn't mean it'll happen today. Don't trade price. I mean, Tesla trades 1 million times a day. It varies every day between highest intraday high and low points by 5.5%. So every day you can make 5.5% trading intraday high and low. So realize that you're not going to trade the price, but this would tell you that several days from now, probably you have a return. That's how I like to think about it.
Got it. And then real quick, so we touched on Apple, Zoom, DocuSign, Tesla. There was one more. Oh, Snapchat. I want to look at Snapchat. Because Snapchat has just gotten beaten down after that bad earnings report. Went from like $70 down to $50, and now it's continuing to move lower. So I'm curious if any demand is coming in as the price is going lower.
I'll let you answer that. What would you say?
Doesn't look like it.
Exactly. Does not look like it. The good news is the supply trend is trending down. So if it's going to return to gains, there are 2 points where that might happen. New month, new money, or at December options expirations.
Well, that just kind of, I guess, not rubs me the wrong way, but it confuses my brain a little bit, because basic economics tells us that a decrease in price will result in an increase in demand.
Only if there actually is an actual increase in demand, right? A
Right.
falling price does not necessarily mean people will buy. The value is in the eye of the beholder. Falling price merely means the absence of demand. It can also mean the presence of supply. Both those things can produce that condition. But the return of buyers is merely contingent upon the belief on the part of the buyer that there is a value there. At present, that hasn't happened. And I think it is reflective of the bias in the market toward growth over value. Value money is out of favor and will be until further notice. And so right now, Snap is a value opportunity. But value isn't the motivation of the market. It is growth. And what is growth? Growth is appreciation. Value is opportunity, growth is appreciation. And so if there's an opportunity, but all the money is looking for appreciation, it's not going to come to Snap until those conditions change. That's just the way it is.
All right, Tim Quast, founder of MarketStructure Edge. Tim, always a pleasure to chat. I can't say that I always understand everything you say, but I try my best. So.
Well, you're not alone. I try.
Okay.
You know, it's
Okay.
I have talked in market structure terminology for long enough that sometimes I run off a little bit, but I always bring people back to the facts.
It's all right. It's all right. Tim, feel better, man. Seriously, feel better.
Good to see you.
All right, AB. Somehow we've done it 3 hours. How do we do? How you doing, man? What's up?
Look at that. Somehow I've done that so far. So
Zoom?
Yep.
Dude, you really need to do yourself a favor and stop looking at this for the next.
Well, I literally there's no point
Seven.
looking at it. I can't sell it. I can't do anything.
I know. So over the next 19 hours or whatever.
Right. Until market open tomorrow. Yep.
Yeah. Dude, don't even look at it. Anyway, we're done here. We have the roadmap coming out live. Guys, if you don't like this stream, I don't know what to tell you. I've officially been on stream today for as many hours as I slept last night. Okay.
Sorry, I just want to check it one more time. All right.
I've been on stream for as many hours as I slept last night. If that's not worth a like
Why'd
to
you
you,
only
I don't
sleep
know.
3 hours last night?
I slept for 4 hours last night.
Why?
Because I got home at like 1 in the morning.
From here?
From
from the airport.
From the airport.
Got it.
Yeah, man, dude, there's weather, it's snowing, it was a whole thing. Anyway,
Dude,
if that's not worth a like, what's up?
I was just gonna say my flight got delayed a bunch on the way back into Detroit as well. So
What-
I was like supposed to land at like I don't even remember 9 p.m. and I didn't end up landing until like midnight.
Yeah, I was supposed to land at 10 and didn't land until like 12:30 or something. So
I guess my stash has to go because I said we needed 300 likes for me to keep it. We're only at 182. So unless somehow we got 118 likes in the next 40 seconds, 45 seconds, the stash will be shaven. You'll see me clean faced and pretty tomorrow again.
Good deal.
I'll have to get with Jordan for some facial cleanser for me, but that's neither here nor there.
All right, AB, I'll catch you guys tomorrow. Smash a like. The
Peace and
roadmap is live next. Stay
Wait,
tuned.
Spencer, who am I?
Richard Nixon?
Yep.
All right. Glad I was able to get that one right. Jeez.